Okay, good morning, ladies and gentlemen. Once again, welcome to Blockchain Fest 2021. Let's give yourself a big round of applause first. Thank you all for joining us in this wonderful morning. You guys are really wonderful. You are here for the first session, okay? Early covers. Very good. All right, so before we start off the day, let's do some introduction, some ice breaking to get everyone running and going. Except for you guys, you already had coffee. For those of you that haven't had coffee yet, maybe some warm-up stretching will do. Are you guys okay with some warm-up stretching? Oh, only 2% responded when... Let's do that once again. Is everyone ready for some warm-up stretching? Yes. Okay, very easy. It is not a hard or a difficult one, okay? All you need to do is, I just need you to voice out only, okay? When I say hi, I want everyone to yell back to me saying hello. Can you do that? When I say hi, you say? When I say hello, I need everyone to yell back to me or say back to me, hi. So when I say hello, you say? Oh, wow. Not synchronized. Let's do that once again. When I say hello, you say? Hi. Let's get some more energy a bit, okay? Everybody, when I say hello, you say? When I say hello, you say? When I say hi, you say? Let's do it louder. Once again, let's get the blood rushing. Everybody, here we go. It's like rapper. I'm a Tupac wannabe or what? I don't know. Okay, here we go. When I say hello, you say? When I say hi, you say? Hello. Hi. Hello. Wow, very good, huh? Very formal, you guys are very formal, okay? It was not even responded like a fun, and it was like very, hi, hello, hello, hi. Anyways, okay, it's good to see you guys all here. Give yourself a big round of applause once again. Thank you all for joining us. Okay, so we're going to start with our first session. Our first topic will be at 10:20, which is 5 minutes from right now. 5 minutes. Okay, we still have 5 minutes, but I'll just tell you guys what is our first topic. Our first topic is called Future of DeFi by Dr. Julian Hosp, CEO of Cake DeFi. Okay, so he'll be coming up and doing the talk, handling the talk right here for you guys. So it's only 20 minutes. Just remind everyone, it's 20 minutes. So if you finish earlier, you guys can have some Q&A. You can have some questionnaire with him. If not, you can meet him personally once it's done to inquire him or ask him more about his talks. Okay? Okay. Wow. If I was a stand-up comedian today, this would have been a tough crowd for me today. Okay, so is everyone ready for our first talk? Come on, let's do that. Is everyone ready for our first talk? Maybe you guys don't want to hear from me. I think they want to hear more from you, I think. So they're just indirectly telling me to get off the stage. Okay, so without further ado, once again, let's welcome our first speaker for the day, Dr. Julian Hosp, CEO of Cake DeFi, with his topic, Future of DeFi.
Good morning, everyone. So nice that I get to talk about a topic that has been with me for the past 8 years, actually, quite intensively over the last 3 years. And yeah, being in that space, having a company, Cake DeFi, in that space, obviously I think a lot about decentralized finance and DeFi. I think about what are use cases that we are seeing right now, what are use cases that could be coming up, that could be very interesting, and I want to, in the next 20 minutes, talk a bit about a couple of those. For those of you that are quite new to decentralized finance, DeFi, really quick kind of overview or the simple explanation, what is DeFi? We have TradeFi, traditional finance. That basically means, we know this, the banking system, a lot of people, very little software. That got extended, especially about 20 years ago with PayPal and many other companies, where we got fintech, fewer people, more tech. And then about 12 years ago, this got disrupted again, where this software layer that you have to trust, where you trust one centralized database, got decentralized. And we basically have DeFi, decentralized finance, where you can trust the software itself and you don't have to trust a company anymore. So we're going into that space of blockchain, technology that all started with Bitcoin, defined in 2008, and then started in 2009. Crypto is actually what brought me to Singapore 6 years ago in 2016. I'm originally from Austria, originally a medical doctor, studied something completely different, and got excited about how data in a decentralized form could be stored in this database. And so there's a lot of thinking on how could this disrupt the world and what would be all the various use cases that we could see. Thinking about this, I'm always someone who likes to structure things and put things a little bit in order, typical medical stuff, where like, you have these symptoms, this could be the possible diseases, this could be possible treatments, this would be the side effects, and that kind of allows you to kind of break things down. And so when I think about DeFi, decentralized finance, I always think actually about 7 use cases. Today we're going to talk about mainly 2 of them. I'm going to highlight all 7. The reason we're going to talk mainly 2 of them is because I feel these are what the topic of the talk is, a bit of the future of all of DeFi. But we're going to cover all of them. So let's quickly go them through. The very first one is that of creating and then also transferring of value or money. The very typical thing here is that this is, let me cover that in a second. Okay. There's a slide that gets jumped there. Sorry about that. That we're basically talking about Bitcoin there. And I'm by no means someone who thinks Bitcoin is the cure for everything. I love Bitcoin. I think it's very difficult for anything else that wants to be a store of value or wants to be this decentralized cryptocurrency to compete with Bitcoin. But I do think that there's many, many other use cases as well. So that's kind of the very first one. Interesting question here always to think about is, why did fintechs like PayPal never manage to kind of disrupt the banking systems there? It's always because there was this centralized point of attack. So whoever who issued the money would then immediately get attacked. Elon Musk talks a lot about this. When at X.com they tried to actually do this and then got shut down. So that's always an interesting kind of aha moment for me that fintechs actually never managed to really do that. Maybe another kind of food for thought here, CBDC, central bank digital currencies. I think a lot of people talk about those where a government would issue their own cryptocurrency. I just want to kind of leave you with a 30-second food of thought here on this. This would not be a decentralized form, obviously. Always ask yourself who gets value, who has an advantage of using one of those products. So you always need to kind of ask yourself this without the utility that comes from it. There is no value in it. The value in a CBDC actually is less for the consumer. So it would be less for us as a user. It would be actually more for the government because the government has a direct-to-consumer relationship. And also it would be interesting for companies because it would cut out a lot of the archaic banking rails. So that's just my thoughts on CBDCs. I'm quite worried actually about CBDCs when it comes to a privacy standpoint. So the CBDC that I would personally endorse or use would be one where I would have some form of privacy because otherwise the government has full control over adding money, removing money, monitoring my money, and this would make me quite cautious. The third part of DeFi is that of lending and borrowing, very traditional banking. We're going to talk about that briefly because it's really, really straightforward. It's quite interesting when it comes to a yield perspective, so we're going to cover that. We're going to talk about so-called decentralized exchanges, where you don't have a Binance or a Coinbase or a Kraken or a Gemini who does the trading, but actually the entire blockchain database does it for you. There are 2 basic models how you can do it. One is with an order book. One is what's called an automated market maker. We're going to cover both. Quite interesting concepts. The 2 I want to talk about most, though, is going to be tokenization of value and prediction of value, because I feel that this is completely underutilized in the decentralized finance system today. We've just had a massive, massive fallout when it comes to tokenization of value. Can I ask who has heard of this entire Terra Luna UST debacle over the past couple of weeks? Who has not heard about this, just so I understand if I have to cover that part? Okay, you can tell me, otherwise I'm not going to cover that. Okay, I'm just going to mention it, but that has obviously been a massive topic here. The one that is unsolved and we don't know if we're actually ever going to solve it, is that of a decentralized identity. So I'm just going to cover it now. I'm not going to cover it later on anymore. The idea here basically is I don't have a government or some central agency that issues an ID card or issues a passport, or that I have any kind of reputational system for the bank when it comes to a credit score. Somehow, I would be able to do this in a decentralized manner. We don't know if this will ever happen for a very simple reason. On a blockchain, I always try to cover things that are familiar with most people, and then I try to cover things that maybe most of you have not thought of. How do we identify as humans towards this decentralized database called a blockchain? What is the #1 way how we identify ourselves against the database? It's via private keys. So we do this via these really long 80-digit numbers. It's a mathematical function in cryptography that we do this with. And that's how we identify ourselves. And so that's always, if you lose that private key, you basically lose the coordinates to the safe in the universe which is associated with your funds. And so if you lose that private key, it's not that the funds are gone, you actually lose the coordinates. You don't know anymore in which safe are your funds. And the big problem of that with identity is I can just pick a new safe. I can just pick a new coordinate, and I would have an unlimited amount, so it would be so easy to change someone's identity. So the risk you have there of losing something is actually not so high because you can just pick up a new one. And that's, so far we haven't solved that. Let's see if we'll ever solve it. This is going to be a very interesting question for the future. But it's so hypothetical and so theoretical. We could talk very from a philosophy standpoint for quite some time. So we're not going to do that. So first one, creating value, Bitcoin. Obviously a lot of questions. I just really quickly give you some food of thought on this. People always ask, Bitcoin right now crashed to 30,000. Is it a good time to buy right now? Obviously no one knows the future. Whoever tells you what Bitcoin is going to do, I mean, that person's probably a charlatan because it is impossible to know. No one knows the future. I would rather ask myself what is the utility that Bitcoin has? I personally think Bitcoin has 3 utilities. 2 of them are still very small. One is very large. The largest one is that of being a risk-on asset, basically being able to bet on when people are willing to take a lot of risk in the market. At the moment, that utility is very small because people don't want to take risk at the moment because of the economic situation. The other 2 utilities are that of being a digital gold, some digital store value that cannot be taken away or you cannot be censored in sending away. That's always relevant when the entire world kind of has an issue or a country has an issue. And the last, which is the smallest one, actually, in my opinion, is that of being a decentralized payment mechanism. I know people always talk about the Lightning Network on Bitcoin. What I think a lot of people are missing, if you want to onboard 1 billion people to the Lightning Network, you actually have to do 1 billion transactions because every Lightning payment channel actually requires a transaction. This would be quite a hefty task for the Bitcoin payment network because the Bitcoin payment network can do about 4,200 transactions within a block, which is about 10 minutes. So it would take quite a lot of blocks until 1 billion people would be onboarded onto the Lightning Network. So that is why I think actually that part is a relatively small part. I still think the digital gold part is very powerful. The risk-on asset is the most powerful. And so your thought would have to be, if you think that you want to invest into Bitcoin or into altcoins which have even more risk on, is do you think the world going forward is willing to take risk again when it comes to making investments? And that's obviously a big question that I don't know if you can answer that. I definitely can't. I think there's 2 bad amounts that you can invest into Bitcoin. One is 0, and the other one is 100% of your assets. So don't invest 0, don't invest 100% or more. And yes, there are people who invest 100% or more by leveraging. I think both amounts are really dangerous. You want to have some exposure. You don't only want to have exposure there. The second part of DeFi is that of helping with the transfer of an asset. Transferring of an asset in a centralized manner works very simple. You have the bank who says, and actually that's always an important food for thought I also want to leave you with. It's not so much about saying that someone received the asset. If I send you a photo, so I send you a WhatsApp photo, is it relevant that you have received the photo? Sure it is, because in this case, it doesn't matter if I still have it or not. value has to be rare. If there's no rarity, value is 0. So the key thing is, in anything that has value, in the transfer part, it's not so much about the receiving, it's about being sure the other person doesn't have it anymore. Otherwise, there would have been a copy. So in actually sending in a decentralized function, the difficult part is assuring that the sender has actually gotten rid of the asset so that you now have it and no one else. It's a double spend problem. So how does the double spend problem get solved? Satoshi solved it by saying the people can vote, but the vote comes from work, burning electricity. And that is a vote. And that secures the network by deciding over what the next block looks like. And so the odds of you cheating are very small because you would be burning electricity to vote. And now if you cheat, you don't get an incentive for this, but you still had a cost. Most people think that mining is all about creating Bitcoins. It actually has nothing to do with that. It's two separate processes. Mining, or then also staking, is actually all about assuring that the sender got rid of the asset. That's the key question. Because if you receive a Bitcoin, but I still have the Bitcoin, you didn't really get it. We just copied the Bitcoin. That's important. And then with Bitcoin at the very early stages, if you think about making money from that, is you have dollars, you buy computers, you buy electricity, you hook them onto the network, and you start mining, which basically means you solve mathematical calculations. And these mathematical calculations allow you to create more blocks. And in the blocks, you decide what transactions came in. And the transactions verify that someone got rid of the Bitcoins and someone new received the Bitcoins. And so the voting power comes from burning electricity. So your return on capital is how many blocks are you generating, because in the blocks, there's a block reward, which is Bitcoin, and you get transaction fees. And that's your return on capital. And then people said, you know what? Why not cut out the entire electricity part? Why just go directly to staking? And in staking, instead of buying electricity, you have the coin, the native coin of the chain. You lock that up. That gives you a voting power. You produce blocks, and you get rewards on that. And so for you, on the staking side of things, you see this as owning coins. Ethereum, for example, wants to switch over. Maybe, hopefully, we can see this finally now in August. They have been talking about this for almost 3 years. You probably know Cardano, DeFi chain, Dash. Dash was one of the very, very early coins to actually offer that. And the idea for you then is, as an investor, yes, you can own Bitcoin, or you can also own another coin. And if you want, you can also get staking returns on that coin. So you can put those either yourself, if you have the technical capabilities, or you go to a platform, and that's exactly where our platform, for example, comes in. You can come to cakedefi.com, put your coins there, and we give you a staking reward on your coins. The rewards go from 5%, they can go to 100%. Where are these rewards coming from? They come from the protocol, just like Bitcoin issues Bitcoins. In this case, for staking, you're being rewarded with extra coins. Very, very interesting cash flow model. A lot of people use it. It's actually the #1 service that, for example, people are using on our platform. The risk is extremely low. It's very straightforward, very easy to use. Decentralized lending works mainly with 3 assets. It works with Bitcoin, works with Ethereum, and it works with dollars in the form of stablecoins. The #2 stablecoins that are being used here is Tether, USDT, and USDC. What do other people do with those assets? You always need to ask who is actually borrowing and why are these people paying for that. They're mainly doing 2 things. They're either leveraging on those assets, or they're shorting the asset. Shorting means I bet that the price goes down. And I need to borrow in order to do both. Because if I would then additionally buy it, on the leverage, if I would have to buy Bitcoin, I'm not leveraging. If I want to short, I want to actually bet that the price goes down. I don't want to buy it. So I actually want to sell it, and I can only sell something that I have, but I don't want to buy it because otherwise I would not make any money, so I would borrow it. And so for both examples, you are basically borrowing from someone. So the rates there come from supply and demand. The rates go up and down. At the moment, with a bear market, everyone's super cautious. What do you think the rates are at the moment? Low, thank you, because the demand is just not as high. And then rates, as soon as when the hype market comes back, the rates shoot up like crazy. Sometimes we see rates that are 20% per year. And at the moment, the rates are between 2.5% to 5% per year. Supply and demand. Biggest risk here is counterparty risk. It can be counterparty as a smart contract on a blockchain. It can be another company. Normally, all these loans are collateralized, but the collateral is always as good as the collateral works. Sometimes the collateral is just not helpful, or the smart contract just breaks. It's very difficult sometimes to judge that. At Cake DeFi so far, over the past roughly 3 years, we haven't had a single incident there, but we have also been very cautious in the way we approach certain models. We have never done any kind of Bitcoin lending with the Kimchi Premium, which is in South Korea. We have not done the Grayscale Trust, which was super popular about a year or 1.5 years ago. We didn't do any of those because this was so tricky for us. We mainly do large institutional lending for leveraging and for shorting, which is in general a very small and or a very soft, easy kind of form. Great. DEXs, decentralized exchanges. This is a very, very interesting model where instead of you have Binance or Coinbase, you have either order book on a blockchain. This only works if the blockchain is really, really fast. Solana, to my knowledge, is pretty much the only blockchain that can somehow do this. And Solana does have a lot of issues. If you've been following the blockchain, it's been stalling a lot. It's gotten shut down a lot. Other than that, it's very difficult to have a decentralized order book because it has to be super quick. The number one way how this is done, and basically the idea here, if you participate, is that you get the revenue share. The number one this is done is by doing automated market making. This means you provide liquidity into a decentralized exchange, so you always have to provide a pair. There's a lot of so-called DEXs that allow you to do this. The first one was Uniswap. It's still the largest one. It's on Ethereum. It then got forked into SushiSwap and then SashiMiSwap, all on Ethereum, and then also PancakeSwap on the Binance Smart Chain. There's a lot of decentralized exchanges that have this automated market maker system. The biggest risk in this, and the returns are insanely high because of that, the biggest risk is if the pairs move against each other. If you're new to DeFi, I would always start with investing into the coins, like in Bitcoin or something. Then I would do staking, and I would do lending. These are the first three kind of use cases. They're very straightforward, very simple. They're unidimensional. As soon as we get to liquidity mining, it gets a bit crazy because you have these pairs that can move against each other, and that's why you have these really, really high returns. I still think it's one of the most exciting avenues on our platform. People love the liquidity mining, but we see that these are generally people who are a bit more they have a higher expertise in everything. Great. Two things that I want to cover a bit more detailed on is that of decentralized tokenization. Traditionally, tokenization works, you lock up an asset, and then you can create a token on the blockchain. The biggest upside is the interoperability, but you don't get rid of the trust, you don't get rid of the regulation or any of that. And you can obviously do this with dollars, you can do this with actual securities, you could do this with gold, you could do this with everything. There's a completely different model to do this, however, and that is you decentralize everything. And it's completely new, completely revolutionary. At the moment, to my knowledge, 3 projects have tried to do this. 2 failed, there's 1 still last standing, and it's not as easy to execute. And obviously, I hope that last project keeps standing, but it's one to really pay attention to. You need to decentralize 3 things. You need to decentralize who's actually issuing the token. In a centralized manner, it would be the bank or the broker. In this case, it's anyone on the blockchain. The second one is how it is backed. It's not backed by the actual security, by the actual dollar. It's backed by crypto. And the last one is where the price is coming from. In this case, the price is not coming from an arbitrage, because the arbitrage is not possible. It's actually coming from the oracle. An oracle is a price feed from the real world. And this is also decentralized. And if you combine all those 3 things together, you have something that can be quite interesting and quite powerful. Namely, you create a vault, you put coins into this vault, crypto, for example, Bitcoin, Ethereum, DeFi chain. It can also be stable coins. That gives you a certain amount of collateral. Then you have an oracle that defines the actual price of the asset. We can use a Tesla share. Let's talk about the good old times with Tesla and say Tesla is worth $1,000, long time ago. And then let's say we have to put in $2,000 worth of crypto into the vault. That gets combined and allows me to create one D-Tesla token, a decentralized Tesla token. The D-Tesla token is then able to be traded on a decentralized exchange. This is trading 24/7. No one can stop this. There is no centralized party that you can attack. There's no intermediary. It's seamless. Obviously, the downside is you don't really own Tesla. You have no voting rights. You don't get access to a dividend. But anyone can access it. The price is pretty close to an actual Tesla price. It varies. I mean, it fluctuates because it's not Tesla. There's no arbitrage possibility. And that gets super, super interesting. There were 3 projects who started with this. The first one was Synthetics. They had some issues with regulation. The second one was the Mirror Protocol. They had issues when Luna collapsed. The last one still standing instead of DeFi chain. It had quite some big news because it had these price feeds together with NASDAQ, and it did a lot of kind of interaction there. It's also the reason why I'm heavily involved in their community and why we have listed the project on our platform. From a regulatory standpoint, it's also interesting. It doesn't look like this is obviously not out of the woods, but it doesn't look like that the Tesla is a security. It's actually just a token. It is not backed by a security. It's not issued by a centralized party. There's no guarantee on Tesla or D-Tesla, so that's quite interesting if you look into that entire model. And the last thing what I think is quite interesting is that this allows us to actually build a lot of extra steps for the future. A lot. Because now you can start with decentralized futures. You can start decentralized options. You can do decentralized derivatives. You can completely create decentralized ETFs. And now you're always asking, why to do this? Well, it comes down to the same thing. There's no centralized party in between. Anyone at the moment who doesn't have access to the centralized banking system, who cannot invest in stocks, suddenly can. Now, they don't own part of the company. They don't own a voting right. But they can get access to that, what matters most to these people, which many times is actually the upside on the price, or getting the price exposure, not having to do this with insanely high fees. This works on a blockchain where the fees are minuscule. And it works 24/7, which is obviously quite crazy sometimes if, for example, the D tokens trading on the weekend, but the stock market is closed on a weekend. Then it almost works like a future as a whole. So summarizing, everything around Bitcoin, I think, is really, really straightforward. When it comes to the lending part of things, very, very straightforward. The staking part of things, very straightforward. Liquidity mining became quite exciting in 2020, about 2 years ago. Last year, this entire decentralized tokenization topic started coming up, and I think this is going to be extremely powerful now, especially when we talk about that of prediction of values, options, futures, decentralized insurances, all built on top of the other financial industry. And so if you want to take a bit of a deeper look, I would be happy if you check out our company, cakedefi.com. Take a look. We try to be this easy one-stop access into the various tools in there, and yeah, should allow you to kind of, even without all the technical knowledge, give you easy access there. With that, thank you so much. I hope you have a really beautiful rest of the day. Thank you. Okay, I was just told I have 5 more minutes for Q&A.
No, sorry, I got the timing wrong.
Sorry, I don't.
Sorry. So sorry about my watch, a bit still in a bit late on timing. All right, once again, big round of applause, everyone. That was Dr. Julian Hosp with Future of DeFi. So if you have any question, anything more, you can consult with him, meet him later, up close and personal, to find out more. Okay, so we have our next session. It would be a fireside chat session of the topic Zero to Crypto. Okay, so I would like to invite our speakers, our moderator. Let's give a big round of applause and welcome Sagar Sarbhai, Global Head of Business Solution and Advisory at Fireblocks. And of course, our speaker, Mukaya Panich, Chief Venture and Investment Officer at SCB 10X. A round of applause, ladies and gentlemen. All right.
Good morning, everyone. It's a pleasure to be here today. And I have the pleasure and the honor to have Kuntai from SCB 10X. So I'll let her introduce herself, and then we'll get started.
Yeah, thank you, everybody, for having me. I'm Thai Panich, SCB 10X CIO. Very good to be here today. We are digital technology investment arm of Siam Commercial Bank, which is the biggest and oldest bank in Thailand. And in the past 2.5 years since we started SCB 10X, we actually focus our investment in the area of crypto and blockchain. So it's very good to be here today with Sagar.
Thank you, Kuntai, for taking time out and speaking with us. Quick introduction myself. My name is Sagar Sarbhai. I lead our business solutions team here at Fireblocks. Fireblocks, for those who are not aware, we are a digital asset custody infrastructure company. What we offer you is technology for enterprises to securely move, custody, and issue digital assets. And more importantly, we remove the complexities from digital asset operations. So without further ado, we can get started on this chat. And Kuntai, you are with SCB 10X. SCB 10X is one of the largest VC funds here in Southeast Asia. You have been one of the early movers in the digital asset space with investments across a bunch of companies who have now turned into unicorns, companies like Ripple, BlockFi, more recently Talos, and of course Fireblocks. Given your vantage point and your experience working with some of the smartest minds and smartest companies, both in Asia and globally, tell us about some of the learnings that you have seen, and how do you separate the wheat from the chaff? How do you choose the winners, and what are some of the qualities that you see in a successful digital asset business?
Yeah, so it's about 4 things. So it's about team, it's about the large market, about the pain points, it has to be the real pain points, and then about the fact that it has to be unique and differentiated solution. So pretty much we're looking for a great team, great founders, and trying to attack the real pain points in a very large total available market, and have a unique solution for their products. So I feel that at SCB 10X, we actually not just an investor, we are also builder. And our bank, Siam Commercial Bank, also building blockchain-based bank. So we have quite broad view about this whole thing. I talk a little bit about our venture building team. We have a technical expertise in-house. We have developers that could build on-chain activities and also build app. So we actually, normally when we invest into all these companies in blockchain and crypto, we actually do many things together. We build together, we become the customer and use the product like Fireblocks in SCB, because we're building blockchain-based bank. And we also build business together, doing a lot of business development. And I actually work with Sagar on one of the business development that we do with Fireblocks and SCB. Yeah, so with this view, basically like we get to know the companies and try to analyze the companies in this type of thing. For example, when back in 2020, we at that time came into the space and looking to invest. And normally we invest in infrastructure because we felt that when the technology is still very new, like in blockchain and crypto, investing in infrastructure, you can never go wrong. So back then we were looking, and we felt that in terms of infrastructure-wise, custody is definitely the key piece, because we think that more and more institutionals will come into crypto space. And once they come in, they want to do trading for their customers, and then the customer's asset will have to store somewhere. So custody is definitely a key piece. And at that time, we were looking at 15 crypto custody actually at that moment. The market is definitely large. Crypto space at that time trading at like $1 trillion, but can still grow so much more because equity market is like at that time is like 100 trillion and bond market is like 250 trillion. So crypto can grow so much more because it can become like another asset class that people invest. When we were looking at the crypto custody, of course, we analyzed Fireblocks, and we were very impressed by the founders of Fireblocks. All three of them are the expert in cybersecurity. They have experience more than 20 years, which is very important. Cybersecurity area is very important for custody. And then, of course, the founders have already successfully sold the business before as well, so they are serial entrepreneur. Then when we analyze all these 15 crypto custody, at that time, all these crypto custody actually focus on cold storage. So try to store securely the asset. But it's still quite difficult to do the trade. When you want to move asset in and out, it takes a long time because it's a cold custody, cold wallet. And a lot of them are very cold. You need to have video conference call in order to get the asset out, and that's so not convenient. So we actually came to Fireblocks, and we were amazed by it because they really focus on asset movement, digital asset transfer very fast in and out, and also make sure that the storing of these digital assets are very secure and very safe. So that is a very unique solution and very differentiated from other players. So it was a no-brainer for us. Like after we talked to and do due diligence on Fireblocks, we really like this solution, and later subsequently invested in Fireblocks. And I think like being a customer, builder, and investor, we also have the unique insight how all these companies that we interact with the customer, because that's very important. So the great companies stand out because they really focus on their product and really focus on customer and the customer need. For example, Fireblocks, you guys support the new token really, really fast. You know, as the digital asset industry moving forward, it's really fast. There's so many new tokens launched, and we want you know, to be able to store all these new tokens into the custody. And Fireblocks is pretty much like the one that has the support the fastest to the new token. So focus on the product. And when the customer requests you know, the support for these new tokens or DeFi access, for example, Fireblocks turn around these customer requests very, very fast. So that's a very, very stand out in terms of why it is a great company.
No, thank you for the kind words. And obviously, since we partnered, Fireblocks has come a long way. Today, we empower almost 1,300 plus customers across different segments. So thank you for your support and all the kind words.
Yeah. No, so Sagar, I also wanted to ask you because, of course, you guys have so many clients, right? Like 1,300 plus, like you mentioned. And yeah, curious, like in your opinion, what is the secret to the successful crypto business? And what advice do you have out there for the startup entrepreneurs who actually want to start their business and want to take from like zero to crypto?
No, sure. As the topic of the conversation goes, zero to crypto, as I said, Fireblocks, we have had the pleasure or honor of working in the industry for almost 3 years. We have come a long way. Today, we power 1,300 plus customers across different segments, crypto native, retail, TradFi, and so on. We have not only helped them secure and move and issue digital assets, but actually helped enterprises build new businesses on digital assets. And that gives us a very unique vantage point to see where the companies are getting successful. And at least in my mind, I use a very simple 4S framework. And this has nothing to do with my initials. But the 4S would be number 1, speed. Number 2, scalability. Number 3 would be security. And number 4 would be simplicity. So I'll take some time and talk about the 4 S's. Number 1, speed. So when you look at any successful business in digital assets, everything revolves around speed. And when I say speed, I mean speed of settlements, speed of transfers, but more importantly, speed of innovation and speed of going to market. You talked about addressable market. The addressable market may not be massive. It may not be hundreds of trillions of dollars today, but it's a very, very high margin business. So the speed to market becomes very, very important. So for example, if you are a retail facing app in Southeast Asia, chances are that your competitor is working on launching a digital asset business. So you need to have that time to market advantage. And choosing the right infrastructure provider becomes very, very important. So with Fireblocks, we can help our clients and prospects go from zero to crypto within a few weeks. And I think that's what we mean by simplicity. Speed. The second factor is around scalability. Now, when I talk about scalability, I'm looking at two buckets. The first bucket is around connectivity. So again, taking the example of launching an exchange, the most important aspect is how easily you are able to connect into different liquidity venues. These could be different exchanges or market makers. Now, with Fireblocks, what you get is this connectivity layer where you can seamlessly and easily connect into 80% of the top global market makers in the crypto space. The other aspect around scalability is operational scalability. Now, let's say you are a large bank. It's one thing to do a POC and launch a simple trading with 100 wallets, but it's a completely different ballgame when you actually go live and have to spin out millions of wallets and do trading on a daily basis. And imagine a world tomorrow when central bank digital currencies become a reality, you would want to spin out millions of wallets for your customers. And by the way, everyone would have heard the saying, customer is king, but the king is also very demanding. Today, the king may demand, I want to trade in Bitcoin, ETH, and the top 5 currencies, but tomorrow they may want to trade on top 100 currencies. How quickly as a business can you start supporting those blockchains and tokens? Today, the flavor of the season may be DeFi, but tomorrow it may be NFT metaverse, and then 2 years from now it may be something else. How quickly and seamlessly are you able to launch new businesses? And again, with the right infrastructure provider, you can do it very easily. Number 3 is simplicity. And again, this is a very often seen as a very boring word and almost used as a cliche. But actually, simplicity is very important, and it starts from the customer journey. You talk about UI, UX. Obviously, you need to offer a very simple UI and UX to your end customer. But more importantly, it's also about your internal operations. How easy is it for you to train your internal staff? How easy is it to do the integrations? How robust and powerful are your APIs? How easily can your developers build using those APIs? So all those elements become very important if you're thinking of launching a digital asset business. And then last but not least, security, which obviously is the foundation of everything. You mentioned about cybersecurity. That really is the genesis of everything that we do in crypto today. And this is obviously our DNA, Fireblocks. Our founders come from a cybersecurity background, and that really is our DNA and becomes very, very important. And when we talk about security, we talk about a multi-layered approach to security. It's not just about securing your private keys, but also securing the other attack vectors. It could be deposit addresses, your APIs. Also, more importantly, how do you prevent from internal collusion or bad actors? So you need to have that set up and make sure that there is no single point of failure around your private keys. So security becomes very important. Overall, I would say the successful businesses take care of these 4 S's. And again, if you are a new player in the market, or if you are, let's say, a TradFi wanting to get into digital assets, you may want to keep these 4 S's in mind to launch a successful business. So obviously, we talked about the 4 S's. We talked about infrastructure. And as you mentioned, SCB10X has been bullish on infrastructure space. A lot of your investments are in the infrastructure space. I would like to believe that over the last 3 to 4 years, the digital asset infrastructure industry or space has come forward leaps and bounds. And I would like to also believe that Fireblocks has had a massive role to play in that. But tell us about your experiences. What have you seen in the last 3 or 4 years? How do you think the industry has evolved? And what are the challenges that still remain and need to be addressed?
Yeah, I think the main challenge in this industry is that things move super fast. And the development is just so fast speed that it's hard to catch up. Infrastructure need to catch up with all this development, right? Like whatever last year infrastructure that support the development from last year, then this year there are new development, and then all this infrastructure has to catch up again. So back in 2020, it's pretty much about DeFi. After the DeFi summer, things are really taking off for DeFi, and then there's so many new DeFi projects coming out in 2020 second half and 2021. So there are many tokens launched, and then all this infrastructure like custody, for example, or trading system need to support all these new tokens. And then of course we have like a new L1 and L2. So the technology can become quite different if they are not EVM based, and so infrastructure for quite a while had to speed up and catch up with all this. And then because we have like L1 totally different, and they have to talk to each other, because we shouldn't have like a standalone country not talking to another country, right? So we need cross-chain infrastructure too, and that for a long time it is something that had to catch up. So nowadays we see many bridges, but then all these bridges also have security issues. So we need to have the new development of bridges that make sure the security is the key. Then in 2021, NFT GameFi, that's the rage at that moment. And then later in the year, we have like a metaverse that also became like the talk of the town. So all these NFT GameFi metaverse infrastructure have to support a new type of asset, right, which is ERC-721. So I think for some time too, we also see some issue that a lot of custody don't support NFT, but then now we see all the custody also catch up and support NFT. Then this year we have this like DAO and Web3 that everybody really focus on. And then for DAO, normally like there are only a few people who are active in governance, but you want more and more people in DAO to actually become active in governance. So you need infrastructure to actually aggregate the proposal and send the notification for the voting and people to vote and things like that. Yeah, and then also need the infrastructure that release the treasury when certain condition is met, so you can pay the people who are actively participate in the DAO or do the work for the DAO. Yeah, that still need to catch up. Yeah, so I feel that those are challenge, but it's very good to see that there are more and more technical expert developers that coming into this area and focus on infrastructure. But I also have to say that nowadays there are so much competition to get all these talents, so it's not so easy. Yeah, I don't know about your view, but yeah, what do you think about all this challenge about infrastructure? And I think that Fireblocks is also at the forefront, because you guys also now really focus on Web3 as well, yeah?
No, I think as we discussed, the infrastructure space for digital assets has really evolved. And thanks to some novel technologies, like for Fireblocks, it has been a pioneer in a technology called multi-party computation. There are other zero-knowledge proofs technologies which have evolved. We are looking at cross-margining solutions, and a lot of the solutions and services from the traditional financial services are now coming into digital assets in form of technology. But I think more importantly, the trend that we are seeing is there's a lot of collaboration and partnership happening in the space. Like 4 or 5 years ago, if you wanted to launch a successful digital asset business, you'd probably go to a third-party vendor and basically outsource everything, right? But that was not a very scalable idea, and also it led to other complications and hacks and so on. But now you look at the industry, and there are so many tech vendors and using so many sophisticated technologies and offering those services. And really, that again is a privilege that we have, that we work with a lot of these infrastructure providers. Some of them are our clients, some of them are our partners. In fact, we were just sitting outside in the booth yesterday, and we were having a look at all the booths around us and realized that almost 8 out of 10 booths happen to be either Fireblocks customers or partners. So that's actually one trend that we are seeing. So it's all about collaboration and partnerships. Just as an example, let's say you are, again, I'll take the example of a retail-facing challenger bank. Tomorrow you want to launch a new exchange and start competing with the big boys like Coinbase and Gemini. What do? So it's actually very simple. If you imagine a pyramid as your business, so the foundation layer will be custody, which will be provided by Fireblocks. On top of that, then you start leveraging some of the other infrastructure providers and vendors. So for example, for AML and KYT, you will go to leading providers like Elliptic or Chainalysis. For OEMS, which is Order Execution Management System, to route the orders, you will go to an OEMS provider like AlgoTrader and Talos. I believe both of them are here in the room. And Talos happens to be one of your portfolio companies. And then if you want to, let's say, do travel rule compliance, you will go to a tech provider called Notabene. You would want to source liquidity, so instead of going to one, when you can go to multiple market makers and exchanges, and again, through the Fireblocks connectivity layer, get access into those and get access into liquidity. So basically, you can literally go from zero to crypto in a few weeks' time and see that multiplier effect on your business, see that impact on your top line and bottom line. Not just on a science experiment, but actually have meaningful impact on your businesses. And again, infrastructure is the key here. And again, it's very, very interesting. Again, going in the future, we'll see similar play out in the CBDC space. It's still early days, but again, DeFi, NFT, CBDC, it's all basically reliant on infrastructure. Payments is the other angle. So obviously we are very involved in that space. We believe that digital assets can completely change the way payments, both domestic payments and cross-border payments, work today. And there again, digital assets and blockchain have the capability of building those new rails for efficient, real-time, cheap cross-border payments. I guess we are running short of time. I'll maybe have time for one last question. Again, more recently, a lot of your investments have been around the NFTs, metaverse space, Web3 space. Obviously, seems to be the flavor of the season. What are your views, challenges, opportunities? Where do you see this space going? Is this just a passing fad, or do you actually see there is some meaning to it and this will change the way we do business and see the world?
No, we think that this area is definitely be here to stay and have high potential. We are quite bullish on metaverse, actually. We think that this market can become very big. We think $800 billion in 5 years from now. And this all driven by creator economies. The more creators, the more user use, the more you can earn as well. And this align the incentive for the first time for blockchain metaverse. For us, when we invest, we also try to be the builder as well. So when we invest last year into the sandbox, subsequently we build into the sandbox metaverse. We build our own headquarters in there. So we actually knew a lot of challenge. It's not easy still to build in the metaverse. We actually hire architect from the real world to now become architect for metaverse, and then we also recruit quite a few.
And you're also running, you had this big hackathon as well on metaverse, right?
Yeah, that's right. And then only last week we finished our metaverse hackathon. So we want to build a community of the developers in this area. So we actually had a metaverse hackathon, Metathon. There were like 63 teams that participated, and they came out with many interesting ideas that build in metaverse, both from the experience side and on the infrastructure side. We plan to actually collaborate with them and recruit some of them to come and work with us and with our partner. Yeah, we think that this area is very interesting, but the infrastructure need to become much more developed, must be easier to build. It need to be able to interoperate, between different metaverse. Right now, it's still very much each metaverse try to build their own thing, but in the future, it should be able to interoperate among each other as well. Yeah.
And I'm sure Fireblocks will have a big role to play there as well. So looking forward to working with you.
We stole our land in the sandbox.
Of course. No, thank you again for your time, Kuntai. It was a pleasure talking to you, and thank you all. If you have any questions, how you go from zero to crypto, we have a booth outside. Please come over. We'd be happy to take your questions and run you through our demo. So thank you very much.
Thank you.
Thank you.
Thank you once again to our moderator, Mr. Sagar Sarbhai, and of course our speaker, Thai Panich. Thank you very much with their topic Zero to Crypto. Okay, so next our topic would be crypto for everyone, a myth or reality. So I'd like to invite, so before we invite, let us remove the sofas first. Okay, once again, as told, Mr. Sagar Sarbhai, if you have any questions or inquiries, you can head on down to Fireblocks booth to consult with them to find out more in details, okay? Of course, you can consult them. It's even best if you can talk to them and ask them more questions in detail. Okay, so our next speaker, let's welcome a big round of applause, Mr. Arkadiusz Balcerek, CEO at AnchorSwap Finance. A round of applause, ladies and gentlemen. Once again, with the topic, crypto for everyone, a myth or reality.
Hello, everyone. Good morning. So my name is Arkadiusz Balcerek. I am a co-founder and COO of Anchor Finance. I came today with one question. Crypto for everyone. Is it myth or reality? During next 20 minutes, I will present you main challenges of crypto mass adoption and how we in Anchor Finance approach those challenges. So, what are the main dilemmas, more problems related to mass adoption? This is definitely full of traps. The journey is full of traps. So, too many projects made by crypto nerds for crypto nerds. One product for many isolated solutions and isolated communities. Fiat crypto gateways which are on the market, only few of them, and if they are already, they are quite expensive. Sorry. Yeah. Only few crypto, again, only a few crypto bridges which are, if existing on the markets, they are just quite expensive. The next problem is anonymous teams. So they are not doxed. We don't know whom we give our money. So that's another problem. Unclear legal state context, the lack of interoperability between the different projects from the space of DeFis, from the space of NFTs, GameFis, and Metaverse. And finally, complex onboarding process into GameFi and Metaverse. So let's start with the first problem. The dilemma of the complex ecosystem. So our response to this dilemma is Anchor Link. Anchor Link is a wallet, but it's not just a wallet like all others on the market, offering just typical crypto services like receiving, sending, and swapping different crypto assets. But also, this is something much more. So we want to have in September this year this product being launched, and this will give access also to the NFT platform, which is our product, our native product, but it will be also a gate to the GameFi and Metaverse. So also some investors who are interested more in the isolated, which are interested in the passive incomes, they also can use our native AMM and product, which is called AnchorSwap, and they can just gain some passive incomes. The most important part of our product of Anchor Link is something which is very interesting, I think here, especially in Singapore, It's the fiat to crypto gateway. So we can offer this service because we have all licenses which are required in Europe and in California, plus in Dubai. So having those licenses, we are able to offer this fiat to crypto to fiat gateway. All of this is made in one simple mobile application, which will be available on the market in September. So let's go to the next dilemma. The next dilemma is many products made for crypto nerds by crypto nerds. So how we approach this issue? First of all, the response for that is our next product, which is Anchor Exchange. This product was yesterday presented by my business partner, CEO Bernard Lamp. And I will be not repeating, but just to summarize, we are two modules of this product. The first one is designed for advanced, if you want, traders. But the second one, which is more maybe interesting for people who have no big experience in the trading, it's the lending module. So in this module, what is probably unique is that we are, if you stake, for example, the Bitcoin or you stake Ethereum, you get incomes in Bitcoin and Ethereum. So it is not like in case of the yield farming where you are earning the native tokens. Here, you just have the tokens you are staking. So the idea here is basically that all earnings are coming from the trading fees, and those trading fees are just shared among the people who are staking. Finally, the third product, which I would like to present, responds to the dilemma of lack of interoperability between GameFis, DeFis, and NFTs. So here I would describe NFT as with three, let's say, words, which is an NFTization, which is tokenization, and which is fractionalization. So if we talk about bridge between DeFi and the GameFi metaverse, here this bridge is solved by the fact that we are doing tokenization of using our token, which is called NAFTO. We try to help the providers of the games who have traditional model to go into the economy, so to go to the type of the play to earn and play to finance. So we are doing this with our second native token, NAFTO, and this native token is linked with our bridge game to fiat to crypto gateway, and also it is linked to our credit card, which we will be delivering soon in Europe. Currently, is already in the US since March. So this way, we just close the bridge between the DeFis and with the GameFis and Metaverse. If we talk about NFTization, NFTization here is more about using, in the, for example, GameFis and Metaverse, you have certain unique features and unique virtual values, which you can use present in form of the NFTs, and those NFTs are being can be traded, can be presented in our NFT platform. So here we just closing the gap between NFTs and GameFi and Metaverse in general. So the last interesting feature of NFT is fractionalization. So what you are doing here is fact that, for example, if you have categories like real estate or luxury products like cars or yachts, what you can do, you can fractionalize them and make them available for people who have less money, less assets. And this way, they can buy the fractionalized NFTs, which is, for example, room in the hotel, luxury hotel, or some part of the yacht, And they can not only profit from the growth of the value of this yacht, of all these properties, but also they can profit from the services which are linked to this NFT. So for example, if they have fractionalized properties of yacht, they can once a year for 1 week use this yacht, or if they, this yacht is being rented or to other users, they can get some incomes, partial incomes from the renting. So this is an interesting concept of fractionalization, and this is something which we will be end of this year also offering on the market. So just to summarize those 3 products, you can see the roadmap. So end of this vacation, around September, we will have on the market Anchor Exchange, which is in 2 weeks' time, NFT, which will be in July, and our wallet, Anchor Link, which will be in September. End of the year, we will introduce fractionalization on our NFT platform, and finally, around beginning of next year, we will have Anchor Pay as a crypto payment plugin. So the 2 last dilemmas is anonymous teams. So this one is solved a way that we are just doxed. Yeah. So yesterday, my partner Bernhard presented our team. So I will be not going again to this, but I just want to tell that you can see all information about us in the LinkedIn. We are present in our offices. You can come, you can visit us in North Macedonia in Europe and in Dubai. Also, we are part of the different events like this one. You can also meet us on different parties, like today in the Selavi in Zug. So we are everywhere, and you can talk to us if you have any questions. So finally, the last dilemma which we have is legal context, which is unclear in case of many projects. So here we basically are officially licensed in California. In Europe, we have 2 licenses, and currently we have the most difficult to acquire license in Dubai, which is ADGM. And we are quite proud of starting this process and getting there, because I think there are 2 or 3 only companies who have this license. And this license is giving us really kind of like trust of our people who invest in our projects. So, yeah, finally, I would like to just tell the final word. This is the whole ecosystem which we are building and which we are built. So the AnchorSwap is already on the market. This is a decentralized automated market maker with the option of doing yield farming. So this is on the market since August last year. You can go and try to have first experience with our token, which is Anchor. This token is already on the market with 220 million. And we plan in around February to finish minting of this token, which will be 250 million in the market. And all our products are built around this token. So every product has a use case for the token. And for example, if you are using Anchor Exchange, you will have less fees if you have staked our token. So this way we build basically the use cases. And also we need to know that with every transaction, there is a certain portion of the token being burned. So it means it's deflationary token and with many user cases. And the chance of being this token in circulation is less and less with every day. So Anchor Exchange, again, will be in 2 weeks' time. You are invited if you like to trade. This is fully decentralized leverage trading protocol. So this is something which is unique. On the market today, we have only 1 competitor, but he is not fully decentralized. So and he's not on the Binance Smart Chain, so that's interesting part. September, Anchor Link, then Anchor Pay will be beginning of next year. This is also interesting, I think, for those one who would like to having like online shops, would like to get payments with the crypto. So that's also something to explore. Obviously, the crypto to fiat gateway, which will be also ready around November, December this year, and an NFT platform, which is again especially for fractionalized high-value product, a very interesting solution. So to finally conclude, crypto for everyone, we believe, is not a myth anymore. So when you look to our suite of products, we pretty much covered all kind of needs of every investor, not only experience like traders, but also the investors who tries to enter to the crypto space, and they are just looking for something which is licensed, something which is easy to use, something which combine all kind of metaverse, GameFi, and NFTs, all kind of products in one. So if you go to our Anchor link, you will be able to get access to all those type of products. And yes, finally, we would like you be part of our journey, and we invite you to our stand if you have more questions, because my time is finishing, to just come and ask those questions. We brought some souvenirs for you, some chocolates, whatever you like, and you are like invited to be to come to over and just say hello and ask the questions. So thank you very much for your attention, and have a nice day.
Thank you once again, Mr. Arkadiusz from AnchorSwap with the title of Crypto for Everyone, a Myth or Reality. Okay, next will be a fireside chat session with the topic, The Road Towards Realizing Web3 Economy. I'd like to welcome our moderator, Ms. Joanna Ossinger from Crypto Journalist at Bloomberg. And also like to welcome our speaker, Annabelle Huang, Managing Partner at Amber Group. A round of applause, ladies and gentlemen.
Oh, okay, sure. Just aligning with the pictures here. Okay. Hey, everybody. I'm very excited today to be speaking with Annabelle, who's super accomplished and comes from TradFi, I believe, FX in Deutsche Bank and Nomura,
Yep.
before becoming managing director at Amber. So really excited to chat with you. Just, I guess, if we can get started, how's Amber Group doing right now? What's big for you guys?
Yeah, well, so we have officially moved here. So we're initially in Hong Kong, especially when we were also chatting back in the days, but we've moved to Singapore. We closed a round earlier this year with Temasek-led Series B+. So that really signified our ambition to expanding in Singapore and beyond. Also, a lot of the regulatory-related efforts here. So we've grown much bigger this year as well, more than 1,000 people globally, working on all things related to more crypto finance services, as well as infrastructure layer services, providing institutional, individual users with access to crypto, to Web3 globally. So yeah, it's been happening with us.
Excellent. So what do you see as the most constructive things happening in the Web3 economy right now?
It's a great question. I think we are still in this such early stage. So there is a lot of noise. There was a lot of hype. So this I guess, the recent market downtrend actually is positioning for a lot of more serious builders to continue building the space without too much noise happening. So I think that's actually a constructive side if you look at the glass half full side of the things with the recent market movement. We're continuing to attract really top-tier talent into the industry. So if you think of Web3 as an evolution of Web 1 and Web 2, but just being built on a more open and permissionless technology enabled by blockchain, then this space, right, blockchain, crypto, Web3 has attracted the world's smartest and a lot of the young, bright minds to the industry, and that's what makes us continue to be so hopeful for the development. So I think that's, again, a very positive and constructive sign. We are facing a lot of challenges, which we can go into later, but I think with this group of people, with developers, with the right creators, with the right participants, being all of us here, I think we're just at the very, very beginning of this.
Okay, great. And so what are some of the factors that are holding Web3 back at this point?
Yeah, so...
Yes.
Yeah, so Web3, if we take a step back, what Web 1 enables is for all of us to read information globally. Web 2 is we can read and write, so that enables a lot of interaction. And Web 3 is, like I said again, having a more open and permissionless infrastructure so that we actually can own a piece of this digital internet, as we call it. So we're on the way there. I think we're probably at Web 2.5. So we have discovered the right infrastructure for Web 3 to be built upon. And because of blockchain, we enabled ownership, a lot of times direct ownership for every participant within Web 3 in the forms of crypto or non-fungible tokens. So these are all happening, but what we're seeing is that it's still a very isolated ecosystem versus the more traditional, what we call the physical real world. So a lot of the challenges rely on bridging that. So in terms of infrastructure layer, how do we actually access? Blockchain is not easy, right? If you want to use a wallet to interact with different on-chain protocols, that's actually quite sophisticated. It requires a lot of education up front. So this is happening, but I would say it's still a really big hurdle for us before mass adoption comes, because right now, even if you look at on-ramp, it's quite difficult. So for people that already have Ethereum or crypto, it's quite easy for them to start interacting with all of the new things on-chain. But for people who don't, depending on where you are, there might not be good and affordable ways for you to even exchange your fiat money to something that you can use within Web3 economy right now. So that's something that I think is a challenge, but everyone is aware of it. A lot of players, including Amber Group, ourselves, are working towards solving that, bridging that gap.
Okay, and what do you think are some of the most compelling use cases, things that will really change, say, the lives of ordinary people?
I think, well, at the end goal of Web3, I think it is about a more open access and equal access to everyone participating in Web3, almost going back to maybe the Web 1 ethos, where the protocols are open source, there's net neutrality, so that everyone is equal in the face of the internet. But what happened in the Web 2 era is that because there's no money that you can bring onto the internet, so a lot of the companies there's the advertising economy, and that aggregated a lot of these resources towards a lot of the centralized platforms, so that users, participants, don't directly benefit from every activity that they do right now, right, on the internet. And Web3, as the proposed solution, is aiming to address that. So what are the benefits then if you look at what is popular now? I'm not saying it's a perfect model, but if you look at Axie Infinity or Step In, a lot of the X action to earn, so that is really letting you monetize your own time, your own movement, your own activity to be able to create value accrual to you as a user directly. So if you look at in Web 2 era, the take rates of these platforms, it could be as much as 100%, right? So Facebook or Google make profits of advertising solely on your activity with them. But with Web3 economy, then that take rate is much lower. So OpenSea or other sort of the NFT platforms will take probably 5 to 10%, and you as a creator will continue to get benefits out of your own creation in perpetuity as well. So, so the first part is for the participant, for everyday user, and the second part is for creators. Then Web3 really improved the economics for all of the participants. And that goes back to my point of Web3 being an ownable ecosystem.
Okay, so what needs to happen to get from, say, the promise of Web3 and what the visionaries are saying about it to get there from where we are now at this nascent stage?
Yeah, so like I said, I think, like I said, it's addressing a lot of the challenges right now. People ask, where does mass adoption come from? But I think the question should be what needs to be built before mass adoption can even happen. So right now, we cannot have billions of users on Ethereum right now because there's the bandwidth issue. And I think similarly to when internet was in the early stages, broadband was also an issue until people realized that and started to work towards solving it. So now, to my point earlier, again, is I'm very hopeful because we have so many bright minds, researchers, developers working towards that, that will eventually get there. And a lot of platforms, such as Amber ourselves, are working to bridge that gap, be it providing a lot of the on-ramp access to users globally. So not just the developed markets where you can easily exchange your $1 to the equivalent of Ethereum, but if you're based in a lot of the Southeast Asia or Latin America or Eastern Europe countries, how do you safely and securely and cheaply do that? So that's just the one part. Another part is also having very easy to use or user-friendly UI UX, because right now if you look at even the most popular games or the most popular so-called gateway, it's still pretty difficult to use, and the games itself is not compared to what we're already used to in the Web 2 era. It's quite different as well. The experience is just not there. So a lot of infrastructure layer side of things in terms of technology that needs to happen as well. So here at Amber Group, we just launched the Web3 enablement platform called the Openverse team to address that, bringing their experiences within Web 2, building virtual worlds, digital human, and really offering that as a service to a lot of the Web 3 creators who want to create something with similar to Web 2 experiences within Web 3.
Okay. What do you think are some of the biggest myths about Web3, like things people think it is that it isn't really?
I guess for Web3 and crypto in general, people think that somehow because it is so-called Web3 or metaverse or crypto, that it's suddenly become a lot more valuable. I don't think it works that way, right? So I think an example is it's also back in the days, I think 3 years ago, the notion of tokenized securities or tokenized assets were quite popular in the forms of security tokens. So there were STO exchanges, XTO, everything about that back in the days. But what happened is you still need a value or a good underlying asset such that investors would want to invest in the first place. Wrapping it in a token form doesn't change that. If it's not a high quality real estate investment or any other kinds of investments. Just because you make it into a security token format doesn't mean that investors would pay for it at a premium. So I think the notion that that crypto itself or Web3 itself has a premium to the value, I think that's a myth. Because if you look at it, it's really just, it's just a technological advancement that made it happen. The way that we use technology is the application that we build upon it, but not necessarily just because it's on the blockchain such that it is more valuable.
Okay, what do you think about the situation with security in Web3 in terms of, you know, hacks and just things being stolen, stuff like that? So how do you think Web3 is doing at this point?
Again, a good question, right? It is, it has unfortunately happened a lot. A lot of times, it's actually the underlying protocol design. So I wouldn't call it even a hack per se. It's just, you know, smart developers who realize there's a loophole in it and try to take advantage of it, right? And I think every time this happens, you improve the underlying smart contract or the protocol level design. And I think that this is how the industry grows, and especially in terms of financial applications. Other times, the hacks come from the more operational side of things, and that's just the human error side of things that could be prevented if we move everything more in a more automated fashion, which is also one interesting aspect of blockchain, with everything being able to code it on a smart contract side. There's no human discretion, and everything can be done automatically. That would hopefully solve a lot of the human error side of things, provided that the smart contract itself is, you know, well designed. So there's also that aspect. But I would say this is, again, one other side of the challenge for people to fully embrace the new technology, right? Because it's new, people don't understand it. A lot of users are worried that it's either hacks or maybe by my own mistake that I lose my own assets. So this is something that also needs to be addressed. There are people who are focusing solely on building different wallet or custodian solutions. And even players like ourselves, which is more of a financial service provider, but we need to integrate our services vertically as well, providing the more infrastructure layer, security, and custody side of the services for our clients. So we actually just recently received the trust license or the TCSP license in Hong Kong, and we'll be rolling out our own custody service as well as part of our overall offering to our institutional and individual users for our platform.
Okay, great. So what do you think about the trajectory of regulation? I know there's been a lot of discussion in the industry about, say, Singapore and how it's treating crypto companies. If you could talk about that, or even go global and talk about what you think, you know, about the industry and how it's being treated by regulators overall.
Yeah, one of the reasons that we moved to Singapore is also because at least the regulatory body here has been very proactively looking into crypto as its own asset class versus maybe some of the other jurisdictions globally where the regulators are trying to fit crypto under either a security or under a commodity or currency and not really building out a separate regulatory framework towards this, which I think it should be necessary. So with that, I think being in Singapore, and I think a lot of people within the industry are moving to Singapore for that reason. So that's definitely a good sign for Singapore to be not just the fintech hub, but also the crypto Web3 hub going forward. And I think it's also really positioning itself that way. So that's a positive element. But again, it's a new asset class, it's new technology. So it has taken time for the regulators to fully understand the technology and the asset class behind it. So we understand, right, a lot of things take time, and we're here to have constructive conversations with them as well. So, you know, really encourage everyone who's based here to have these conversations with the regulators to help them understand better and hopefully push a lot of the timeline forward. I've said this a lot, so I think here at Amber Group, because all of us come from more traditional finance background. So compliance and all of that has been day one, very, very important for us. And we have acquired many licenses in different jurisdictions globally, and we're still in the process of acquiring much more, not just the more crypto-specific sort of VASP or crypto license, but also the more traditional license, the e-money license, so that we can provide on-ramp services to individual users, a lot of the traditional broker-dealer licenses where we can service the institutional clients. So I would say, regulatory effort has been one of the most important for us, along with security and all of that. And we see different phases with different regulators in different jurisdictions. I would say Singapore, to some extent Australia, some in Europe, and I think, of course, Dubai, right, also emerging as one, versus what we're seeing in the US, where they're really regulating as a security. So I think there's a lot of polarizing development, but for us, it's being global means, we really need to have licenses everywhere. So yeah, we also want to see a lot more progress from the regulatory side, for them to really think about what it means to regulate a new asset class or new technology, the same way they thought about internet and a lot of things being digital.
Okay, and we are almost out of time, so I guess if you could maybe just wrap up with kind of what you want the audience to have as takeaways, like what do you think is really the big thing about Web3, what's most exciting to you?
Yeah, I think what's exciting is that we're at such an early stage. It's great to see everyone already being part of it, and I think we should all focus on education side and adoption side to bring more people, more developers, more creators, more users to the ecosystem, and then really seeing where it can grow. And I think even with crypto and Web3, it provided such an interesting, almost an isolated ecosystem at the moment to even experiment on a lot of not just economic side of things, there's game theory and all of that, but also on the governance side, that could be particularly interesting, even to see how the real world governance or politics take place. So yeah, just really encourage, especially if you're the younger generation who are born digitally native, to really come and explore this space.
Okay, Annabelle, thank you so much. Thanks to the audience. Really appreciate it.
Thank you, Joanna. Thank you.
Thank you very much, ladies. Thank you very much. A round of applause once again to our moderator, Ms. Joanna Ossinger, and our speaker, Annabelle Huang, with the topic, The Road Towards Realizing Web3 Economy. Okay, so we move on down to our next topic, which is it too early to get excited about Web3? And I would like to invite our speaker, Ms. Francesca Tay, Chief Content Strategist at Bybit. Let's give a big round of applause and welcome our speaker.
I do. Can everyone hear me okay? Good morning. What if I told you that everything you knew about the world is going to change? You tell me, hey, I knew that. Weren't we hearing what Joanna and Annabelle were talking about just like 5 minutes ago, right? I love your fireside chat, ladies. It almost feels like we've rehearsed it, setting the stage for what Web3 is like, early adoption. I think your final thoughts were amazing. It almost seems like a seamless transition for me that I pick up and be like, how do we then encourage mass adoption? The way we eat, the way we shop, the way we attend events like this, and even the way we get married. So much to think about. And really, it's an exciting time to be thinking about these things, so much to unpack. So right now, I'm gonna start easy and post a question for you guys by the raise of hands. Does anybody here know what Facebook is? Okay, we have 5 honest people, and then there's everyone else. Facebook rebranded recently and is now called Meta. And this is a very interesting kind of shift that we're seeing right now. It's certainly not the first, but it brought to life a lot of what made waves and caused people to be aware that Web2 companies, big techs, are making big bets into Web3. And then you have Google, the poster child of the internet, building Web3 teams to capitalize really on the booming growth of things like cryptocurrencies and Web3 and the metaverse. You're hearing all these words on loop, almost feeling like a jargon, right? And then you have Microsoft pumping in $70 billion to buy gaming companies like Activision Blizzard, very well known, and that is huge, right? Because these are the biggest gaming designers, the brains behind things like Call of Duty, right? I think they have like StarCraft. And I'm pretty sure they didn't design the game, but pretty sure they bought over the company behind my mom's favorite game in the world, Candy Crush Saga. Meeting the age groups and audiences that range from the young all the way to the not so young. And in the case of Microsoft, it goes well beyond just the blockchain gaming kind of approach. They also pumped in or led a funding round of $450 million to invest into Consensus, which is an Ethereum development firm. Now, you might be sitting here thinking, yeah, like these are big tech names, right? But these are all US companies, Silicon Valley. And here we are sitting in Singapore at the Singapore Blockchain Festival. I'm like, what does that have anything to do with what I'm doing here, operating my business? Where is adoption going to take place, where we are right now? Well, that $500 million fundraiser that Microsoft led, it involved names that are a lot more closer to home. You have Temasek. And you have SoftBank. That is just the tip of the iceberg. Being a part of something much greater. Temasek, Singapore's state-owned investment firm, pumping in separately, but also leading their own funding round of, I think, $200 million to put into Immutable X, which is a protocol that supports TikTok's NFT marketplace and an upcoming GameStop NFT marketplace, in case you haven't heard. And then Masayoshi-san's SoftBank, Japanese-based, one of the world's largest investment firm in the world, wanting to launch their very own NFT marketplace through a subsidiary. But you're hearing all these big tech firms, very familiar names, betting big on something that not many people really know what it's about, right? What is Web3? Here's the thing. They've been spot on for many years now. Caused me to think, maybe they know something here that we don't know yet. I've been skipping a lot of slides here because, but here we are, catching up. You guys seen these movies before? Yeah? It's funny because every time I join a conference or talk in a panel, this guy here, Ready Player One, it's like the poster child for what the metaverse might look like. And I'm guilty, definitely, of using this example again and again, right? Because I think it's interesting that it shows us a perspective of what a digital reality might look like. And then you have Black Mirror, one of my personal favorite shows in the world, showing us yet another version or another perspective of what digital reality might look like, a sobering one at that. Some of the concepts discussed there can be scary, and we don't want to forget or neglect some of those issues that we want to consider when we're building this future in the digital realm. and then Matrix. I'm looking across the room right now, and some of you are thinking like, what is this movie? You guys might not even be born yet when this movie was out. But one thing that these three movies have in common is really how they're able to show a visual representation of what a digital future can look like. You will notice that there are different representations of it, and each of these movies is depicted in very different ways. One thing's true. The metaverse is inevitable, and Web3 is happening. Something caused this to accelerate, and that was the pandemic. Today, I'm standing here, mask off, right, in the presence of around 100 of you in the same physical location, something unimaginable just 2 years ago when everyone was still in isolation. The country was in lockdown, so were the world. And I believe that that aspect of isolation caused people to value a lot more social interactions online. I don't know about you, but you know, some days I wake up, right, and then I look into the mirror and I'm like, girl, you looking fly. And I take a picture of myself and it's like, this is a pretty sick picture. I'm gonna post it online, right? I post it on Instagram, post it on Facebook, post it on Tinder, I don't know, I post it online, right? And then next thing you know, 10 seconds later, I'm scrambling to like delete it. I'm like, maybe you don't look that fly after all, right? But I mean, what happened there? Like, what made people think that way or react that way, right? I think that, you know, something caused a stir or a shift in how we value our digital personas. Sometimes, and I'm not saying this for everyone, but sometimes, and for some people, a lot more than how we view ourselves in reality. Maybe it's the longevity of which digital forms of ourselves can stay online forever. Maybe it's how it's easily shareable, right? I walk off the stage today, and if none of these recordings were happening, you might forget, right? Forget my name. It's like, who's that again, and what does she look like? But if this was recorded, put up online, people can share it anytime. It caused people to really value a digital persona. And I know that some of y'all people here also kind of look very different from how kind of like put yourself out online, LinkedIn, Facebook, and like how we look right now in real life, right? Look, I've been there, okay? I get it. I'm a catfish myself. This is how I look online. I've seen this story before. You know, it's really all about connection. Human connection, but also digital connection, data connection. And I want to touch a little bit more on that, because data at this very point in time is very difficult to transfer from one platform to another. In today's day and age, say you're an Android user, right? Wanting to get a new iPhone and wanting to transfer all your data and put it up on the iOS, or vice versa. It ain't gonna be easy. It's gonna be time consuming. You're gonna have to go through several different channels. There is no one kind of like connectivity that makes it easy for that to happen. One thing you buy on a platform, when you get on a new platform, you probably have to spend some money and buy the same thing over again, right? It really is not the most efficient way of going about, you know, transferring data. Enter Web3, or the idealized version of what Web3 is, where all data can be transferred in a fluid manner. where moving things in and out becomes not a problem at all, really. So let's talk about how the internet will change. What is Web3? And again, I want to pay tribute to Annabelle and Joanna, because they described it so beautifully and so succinctly that it makes my job a lot easier, right? But I'm going to stand here and be very honest with you. As the speaker appointed by the powers that be to be talking about Web3, I don't actually know what Web3 is going to look like. But I feel good about that. I don't feel terrible about it, because when I look around, when I talk to the brightest minds in the field, and when I do a quick Google search, and I see people like Jack Dorsey, Andreessen Horowitz, I see people like Elon Musk having very divisive views about what Web3 can look like, I feel okay that I don't know as much about how it will take its form. Elon Musk famously, tweeted about Web3 and saying yeah, it's no more than a marketing buzzword. I'm cool with that too, because I do marketing, and it's thanks to buzzwords like these that makes my job a lot easier, right? But to me, Web3 is really the unlocking of what the internet as we know of today can be like. A decentralized form of the current day internet where ownership is key. The idea that data in the internet can be held in the hands of the individual users, away from conglomerates like Facebook, Amazon, Apple, Google, you name it. Full ownership. But what would that look like? What would it mean for you and I? Anyone into gaming here? Yeah? Nice, nice. You guys might have heard of, if you're into gaming, right? You might have heard of Fortnite, RuneScape, Second Life. These are really games that gave us a glimpse of what Web3 gaming, blockchain gaming could look like. I want to talk about Pokemon Go even being revolutionary in the AR world. And earlier they also mentioned Axie in the play-to-earn realm. I know that many people are really, really into these games. And it does show us a lot of principles of where all of this started. Some of the things here can help people make money, sometimes a living even, right? From leveling up characters, from buying in-game skins, from even selling your account. And just when you think that you've reached the peak, there's so much more to be explored. Ever heard of Fantara Labs? If you haven't, you might want to take this down. Fantara Labs is creating a whole new gaming ecosystem that brings together the best of traditional gaming's deep content and creativity and game design with the best of what the blockchain world can bring. That's connectivity, that's utility and ownership, and interoperability. And it's hoping to bring us to the next frontier of gaming. Imagine being able to buy a skin in one game and use it in 5 or 10 or as many other games that you'd like. We are at the part of exploration where the metaverse, gaming, and cross-chain technology hasn't really expanded enough yet. But let me assure you, we are getting there. How about fashion? I think everyone's looking sharp today. I mean, I put on this white blazer that I rarely ever take out. It has been in my closet for the longest time, right? I know that fashion is a big talking point, and it's really interesting because we're seeing a lot more convergence from fashion as we know it. Names like Nike, right? With names that are not as familiar. December of 2021, Christmas came early for this company, which for the longest time I was like, yeah, RTFKT. I'm like, nah, Artifact, guys, Artifact. Christmas came early for Artifact, December 2021, when Nike announced plans to acquire the NFT creator, right? And Adidas, entering the metaverse, and even luxury names. Not just holding fashion shows in the world of pandemic, right, where everything's on lockdown again, on the metaverse, but also announcing plans to accept crypto, Bitcoin, as a form of payment. This is huge because these are, again, some of the biggest names in fashion that are now steering their presence in the metaverse. You know, it's like if I buy a new pair of Nikes today and I want a digital version of it for my digital persona, I can do that, right? And if I want or have a limited edition of that, more value for me, right? I can call it mine, full ownership, and people see value in that. Nothing says to have and to hold any better than immortalizing your marriage on a blockchain. Personal happy story, guys. 2 weeks ago, I got proposed. I got engaged, right, in what I thought was the most romantic proposal ever. Happy story there, but follow-up funny story. The original plan wasn't quite as romantic. Or, I mean, my fiance thought it was, but my fiance is a coder, a blockchain engineer. So what he thought, well, given that much, it's super creative, right? What he thought was super romantic was proposing by, you know, kind of coming up with a website where I'm able to mint my own NFT ring. And then kudos to the guy for creativity. And I really like the idea, but I mean, at least give it some, well, he did give some utilities, like you can mint the ring and then go to the store and claim the actual physical ring. So I'm like, okay, that's pretty good, right? But then we're at the stage right now where, you know, we're looking for wedding locations and it's super exciting. And then we came across this. And this is giving him ideas again. Like, come on, guys. This is immortalizing your love on the blockchain. And you're hearing and reading a lot of these kinds of things on the internet. Couples, and there's been several right now. It's many of them in India, you know, getting married on the metaverse, right? With a digital priest and getting an NFT as their marriage certificate. I think that, you know, for some people it might feel like surreal, but for some, this is their new reality. It is perfect, though, for hosting family and friends from all around the world. So, I don't know. It's not out of the question. Might invite you guys in. On that happy note, like I mentioned, there are many things to consider, right? As depicted in my favorite show, Black Mirror, as you know, our fellow panelists, Annabelle and Joanna, mentioned in their panel as well. Some of these things do require a lot more deep thinking. And I want to be very... I want to acknowledge that, right? Experts giving rise to issues like, you know, distorted realities, like addiction, like mental issues. We are at a stage where we don't know that much yet, and some of these things, in the very extreme, could very much mess with our heads. It's new, it's exciting, but it could be scary. But here's the thing. The growth of Web3 is inevitable. The question is, what's it going to take for mass adoption? And for mass adoption to happen in a healthy way. We need a few things. We need better user engagement and experience, right? We need better accessibility, right? And we need education. And this is my favorite part of the topic, because as a content person, I feel like this is where my place, being able to educate people and bridge and become the bridge between what we can bring to the Web3 world can actually happen. And I personally found my, boast of this all the time, being in a company like Bybit, which is at the forefront of this revolution, and with a core ethos of innovation and care for the customer at the heart of the business, it allows me to intervene and be a part of this entire process. For those of you who don't know, Bybit is your one-stop crypto platform, right? Everything from a trading exchange, spot, futures, options, derivatives, down to NFT marketplace. There's also DeFi platforms. And it's a very successful company. And it is a company, again, at the forefront of growth, wanting to be the bridging agent for what Web3 technology can offer. One of the reasons we're doing that is through our involvement and contribution to BitDAO. BitDAO is the world's biggest decentralized autonomous organization by treasury count. And it's looking to push, really, the boundaries of what Web3 can offer through investments in various industries, right? Hundreds of millions of dollars have been pumped into blockchain gaming, like Game 7, or layer 2 scaling solutions like zkDAO, blockchain education with EduDAO. So much to talk about, and there's so much that I can say, but time is running out. I did take note. Rounding up, I just want to leave a thought with all of us here. I remember being in primary school when the dot-com bubble burst, and I want to acknowledge the distress and the complexity that came with that event happening. I think a lot of the fear and scars of that are still, remnants even till today. But one other thing we've observed is also that the internet is still here, in fact, bigger and better. So we as a generation really are right now at the precipice of change, of something very, very big. The future is now. How will you contribute to Web3? My name is Francesca. Thank you for your time. You guys are awesome.
Thank you once again, Francesca Te, with the exciting topic. Is it too early to get excited about Web3? Okay, so next, let's welcome our next speaker with the topic, how to imbue meaning, purpose into your blockchain project. Without further ado, let's give a big round of applause and welcome Chou, Gamification author. Maybe next year we'll have a signage that says applause here. Take it away, sir.
Hello, everyone. Thank you for having me here. I appreciate you being here because it is noontime, and so I am competing with food in your stomach. But today I want to talk about something that's potentially more important than food, which is meaning and purpose. So specifically, how to imbue meaning and purpose into your blockchain project. Now, quick background on myself. So I've been known as a pioneer in the world of gamification since 2003. I started the framework called Octalysis, which we'll talk about a little bit today, and my design work has empowered over 1 billion users. I've taught my framework at places like Stanford University, Yale, Oxford, Tesla, Uber, IDEO, Google, a variety of places. I was rated a #1 gamification guru in the world 3 out of 4 years out of the top 100 gurus. Later on, I became a judge, so I became disqualified to being a guru. And I also was working with one of the co-founders of Ethereum, Anthony Diorio, in terms of being a chief experience officer, crafting delightful blockchain experiences. And in Taiwan, I was also the head of digital commerce and head of creative labs, working on AR, VR, metaverse-related topics. So I wrote a book called Actionable Gamification. We sold over 100,000 copies. At least, I know a handful of billionaires are fans of my book. Maybe some of them are 100 millionaires now because of the crypto market. I actually planned to announce this, and they said I'll sign books out there, but yesterday I just put on the table and we sold all of them. So unfortunately, we can't sell these books. But this link takes you to Amazon. If you're interested in this talk, you're interested in the framework, you can check it out. If you don't like and so this is the Octalysis framework that I'm most known for. It's a combination between the word octagon and analysis. And it breaks down all human motivation into these 8 core drives. So everything we do in life is based on one or more of these 8 core drives in the center, which means that if there's none of these 8 core drives, there's zero motivation. No behavior happens. And today's talk is not about the Octalysis framework. I wrote a big book about it. I have lots of online TED videos or whatnot about it. So I'm not going to go through what these 8 core drives are in detail for. But I'll quickly summarize that these are the 8 core drives, but there's also different natures of these core drives. So the left side of the octagon, we call them left brain core drives. Doesn't mean it's necessarily on the left side of our brain geographically, but it symbolizes our logical brain, versus the right side, the right brain core drive that symbolizes our emotional brain. And what's interesting about left brain core drives is that it deals with extrinsic motivation, things you do for a reward, purpose, or a goal, but you don't necessarily enjoy the activity itself. So once you obtain the reward, you hit your goals, or get used to the reward, you feel stale, you stop doing the activity, right? If you're rewarding users, hey, do this and you will get rich, or you'll get free coins, they don't do it because they love your project, because it's enjoyable, it's because they want the reward. If you say, hey, do this and you're leveling up, you're getting big achievement, you're getting POAPs and badges, they're not doing it necessarily because the activity is fun, it's because they get an extrinsic reward. The right brain core drives deal with intrinsic motivation, things that you just enjoy doing to the point that you're willing to spend money on just to experience it. And even if we lose all our progress the next day, we still want to spend time doing this today, because that's how we measure our quality of lives. How much time we spend on things we enjoy doing. So that's left brain, right brain core drives, but also there's a difference in top core drives and bottom core drives. Top core drives are what are called white hat motivation core drives. They make people feel powerful, they feel good, they feel in control, but there's no sense of urgency, so they procrastinate. The bottom ones are called black hat motivation core drives. They make people feel urgent, obsessed, even addicted. But in the long run, if that's the only motivator, it leaves a bad taste in people's mouths because they feel like they're not in control of their own behavior. So white hat motivation is good for long-term community management, for loyalty programs. We designed the loyalty program for Porsche in Europe. It's good for creative and innovative working spaces where you want your employees to just be happy for the long term. Black hat motivation is good for one-time transactions. You just want them to give you their credit card to mint something, or short bursts of activity like a one-week competition and be on a wait list, whatnot. But if it's drawn out, people do burn out. So again, that's the framework. When I created the framework in 2012, I did it as a tool to help solve problems. I didn't have any ambitions in academia, but last year I went to Google Scholar, searched for my framework Octalysis, and it looks like there is over, I think, close to 2,000 now, PhD thesis and academic journals describing how the Octalysis framework is used in quality management, in mobile health space, and all these different spaces. And so just very, very blessed that something I created in the framework became very useful. Now, today's talk is about core drive 1, epic meaning and calling. And this is the drive that says, because we feel like we're part of something bigger than ourselves, we feel engaged, motivated. This is why people, for instance, contribute to Wikipedia. We know people don't make money when they contribute to Wikipedia, right? But they don't even advance their careers, update their resumes. A lot of people spend hours every day after work contributing to Wikipedia because they believe they're contributing to humanity's knowledge. They're protecting that knowledge. It's something bigger than themselves. And so in a game, you often see this theme, right? A game is like, hey, the world's about to end, but somehow you're the only person qualified to save the world. It feels really engaging and motivating. And so gamification is really about how to bring this into the real world. Now, this leads me to a funny story many years ago where I had a client come to me and said, Yukai, how do you add epic meaning and calling to selling out your soul for money? And I'm like, okay, that's a funny thing. What do you mean? He's like, well, we're a blockchain project, but we're like a reseller affiliate program. So basically, our users would basically promote and sell products that they don't care about, they don't believe in, but if they sell it, we'll give them tokens, right? We'll give them coins. So in a sense, it's kind of selling out your soul for money. So how do you add epic meaning calling that? Is that even possible, right? It just sounds so kind of sleazy, right? And so when you think about what gamification means, gamification is really adding game elements and game design to non-game/mundane things and make them more engaging. And so when you think about core drive 1, epic meaning and calling design, it's adding a sense of meaning and purpose to make potentially mundane things more epic. Now, they could be already epic to begin with, but it's potentially mundane things. So how meaningful is it to do things like buying a music player or driving to a destination with navigation? being a reseller, like the example I just said, giving out a loan from a bank, protecting fake energy sources, forex trading, not that epic, right? Selling shoes, right? And in my book, each of these examples, we say there's companies that bring it to become something epic and purposeful in people's lives. Now, and I'll go through a couple examples right now, but there's two scenarios with core drive 1 epic meaning and calling design. Existing, inspired. Existing means that the epic meaning is already there. It exists to change the world, and people already care about it. So when Tesla says, we're here to accelerate humanity's progression towards renewable energy, that's existing, right? People already have this desire. Maybe many, many years, 20 years ago, this has to be inspired, but now people already have that desire. And the product itself does protect renewable energy or enhance that. Then some projects, like I said, it's just a tool. There's no epic meaning calling. You have to inspire that through good storytelling. You have to tell them what your mission is, what you believe in, and that's how you get people to really fall in love with the project. So Waze, right? Waze is a navigation app, right? And when you think about navigation, you don't think about something epic, right? It's just a tool. You turn left, you turn right, you get to your destination. It's very functional. It's not fun. And they do a lot of gamification strategies, but one of the things really cool about Waze is that they actually implement epic meaning and calling into the design. In the early days, when you sign up, it really focused on the mission that we're outsmarting traffic together, we're beating traffic together. So when you're driving Waze on, you're not just turning left, turning right, getting to your destination. You're helping a whole community of brave Waze warriors fight this monster called traffic. And everyone hates traffic, right? No one likes traffic. So the way to fight traffic is to drive the Waze on. So even if you already know how to drive to your office, a lot of people actually still drive the Waze on because they want to communicate, they want to contribute to the community. And I remember back in the early days when I first started using Waze in Silicon Valley, it wasn't accurate, right, because it's a user-generated map. And it took me to the wrong location 2 times. And I was like 10, 20 minutes late for my meeting. And you think the only function of a navigation app is get you to the right location, right? And usually when you fail at that one thing you're supposed to be good at, most people will be upset. It's like, this is a piece of crap, I'm going to delete it. But because Waze has epic meaning and calling, a lot of people, when they're taken to the wrong place, instead of getting upset and deleting it, they're like, oh no, the map is broken. I need to go fix it. How powerful is that when you fail at the one thing you're promised you're good at? Instead of being angry at you and throwing you away, they actually defend you and protect you. And this is because epic meaning and calling, unlike the other 7 core drives, is not about what I want, what I get out of it. It's how I can sacrifice and be part of that bigger picture. The 2 most successful Apple commercials is called 1984 and Think Different. Now, I'm not going to go into details on them, but the key theme about these commercials is that none of them talk about products. They don't talk about, oh, we have color screen now, we have more RAM, we have more storage space. That's what all the competitors are doing. They just said, we believe this is how the world should be. Because of Apple, 1984 will not be the dystopian George Orwell novel 1984. Think different. Oh, here's to the crazy ones. Because those who are crazy enough to think they can change the world are the ones who do, right? They just said, we believe in this. So, and literally, it doesn't have to be their product. It doesn't have to be a computer. Say, hey, be the crazy ones, change the world. Buy our paperclip, right? Wear our glasses. It doesn't matter. People resonate with the higher meaning and purpose. Like, wow, I want to stand behind this, and I love the brand. I'm a loyal customer. If people tell me the brand is overpriced, and they never give discounts, I'm going to defend them with my life. Like, you don't know what you're talking about, right? Other companies, when they do loyalty programs, they're not loyalty programs, they're mercenary programs. Because if you're going to whoever pays you the most, that's no loyalty at all, right? That's the opposite of loyalty. But when you have true loyalty, it's because you have epic meaning and calling. Nike's slogan is not, high-quality premium shoes, right? What's Nike's slogan? Anyone know? Just do it, right? So Nike said, if you believe there's no excuse, no procrastination lifestyle, you're a Nike person. And as a result, you need to wear Nike shoes, Nike shirts, and all that stuff. You need to represent the brand because of higher purpose and meaning. Avon is a women's product company, and they're focusing on women empowerment. So it's like, hey, it doesn't matter where you're in the world. If you're a woman, through Avon's reseller program, you can raise your family, support your family. So if you buy from Avon, it's because you support women empowerment. So what is the epic meaning that the blockchain world needs right now? Well, right now we know the crypto world is a little bit in pain, right? So hope is something pretty important. So when you're designing for any project, you want to tie it to a higher theme. Honor, saving the world, freedom, hope, a variety of themes. Because that's important. In some projects, like I said, hopefully when you design your project, it already has that in it. It's in its core, its DNA. But let's say even if you don't, there's ways to do through storytelling and good design to communicate that. Because if people don't join your project because of a higher purpose and meaning, you don't communicate that, then people are there just because they think they can get rich in 4 months. And that's not going to last, right? Once they realize, oh, maybe I won't get rich in 4 months, everyone abandons the project. So you want to make sure that you have these themes tied to it. So back to that project, right? About, oh, selling out your money for your soul for money. So, making money is kind of like a sleazy thing, right? But freedom, hey, freedom is a higher level theme that people can get behind. If someone says, hey, I want to get rich, it's like, oh, what a sleazy dude. But if someone says, hey, I want to obtain financial freedom, oh, this person has very sophisticated thoughts, very thoughtful young man, right? So freedom is something people can get behind, but oftentimes it's the same thing. Now, blockchain, what does that mean? Blockchain gives people control, and it gives you privacy, anonymity, privacy, right? So instead of saying you're selling out for money and there's a blockchain twist to it, why don't we turn around and say, well, we're spreading freedom you truly own. So what does that mean? So we can turn it into a narrative that says, well, financial freedom with all your data owned and controlled by questionable entities like all these banks is not true freedom, right? You're making money, but your data is owned by the bank. So that's actually money made through slavery because you're kind of being owned. So we help you obtain financial freedom while having all the control of your own data so you can decide who to monetize with, achieving true freedom. So now the sleazy selling your soul for money company is a company that's helping spread true freedom, right? And so again, this is an example where there's none and you try to bring more. I'd highly recommend you actually try to create projects that change humanity. You want to explain why humanity is better because of your project. Now, when we do Core Drive 1 design, believability is key. People can say, or companies can say, oh, we're here to change the world, but if people don't believe you're serious about it, they don't think you're sincere, then it's a slap in the face. If people believe this oil and gas company is not good environment, and they say, hey, pump with us to save the environment, obviously that's an insult, right? It's a slap in the face. So you want to make sure that when you communicate, there's believability, it's constantly reinforced, you take action. A lot of times you take sacrificial action to show you're serious, just like Tesla. In 2014, they gave all their electric car patents. They said, you can use it. And they said, and people are like, oh, wow, are you trying to trick your competitors? Why do you do that? And they said, well, it's because our purpose statement, right? We want to accelerate humanity's transition to renewable energy. So if there's only one car company in the world that's making electric cars, there's no way we can fulfill our purpose. The only way we can be successful is a lot of car companies make electric cars. Now, hopefully we're still the best, but we cannot win at all if we're the only one. So people say, wow, they're serious. They really believe this mission. And as a result, it doesn't matter throughout the years Tesla loses money, does well, or whatever. Everyone's like, a lot of people are like, hey, we believe in it. We're gonna die with the captain, right? We're gonna go down with the ship because they believe this epic meaning and calling. Now, what makes a blockchain and NFT projects valuable? So my book turns out to be, I guess, very popular in the NFT space. So I started advising some projects. And so I did some analysis, and really it's about 3 core drives. Scarcity, obviously things are scarce, but when it comes down to scarcity, there's still this thing where you have to trust the developers, right? Because, hey, this NFT is really strong, so let's issue another 10,000, let's issue another 50,000. So it's almost like the government, they can just print out more money when they want. So you have to trust the developers. They are actually serious about creating this scarcity in NFT project. There's the epic meaning that I mentioned. Even when you have scarcity, if it has no meaning or purpose, it has no value. So it has to represent something that people care about, whatever it is. Sometimes it's celebrity, right? But people have to care about it. And then community through social influence. So we're doing a little, and I'll share a little case study of my project MetaBlocks, which is how we implement these things, especially how do we implement meaning into this purpose. So MetaBlocks is an NFT project that's powered by real-world places and real-life memories. So we want to say real-world places because that's scarce, and it's powered by real-life memories. That's the meaning part we're going to talk about. So first of all, we thought about, okay, what's actually scarce in the real world? Well, we thought about, well, it's real estate and it's gold. But gold is fungible, right? My gold, your gold, we trade the same thing. But real estate is not fungible. You know, your home, my home, we can trade, even if it's the same dimension. It's just a little different convenience. Mine, I have memories of my first child. You have your graduation memory. It's truly different. And we know real estate is a very strong in the real world that people kept the scarcity. So what we do is we take a city like San Francisco and Miami, This is San Francisco, this is Miami. And we divide places into blocks. So these are NFTs that represent that physical location. But that's just the scarcity part, right? We know that, hey, we can't just fabricate new land. These are the places. And they're truly non-fungible. Some places everyone's fighting after. Some places in the outskirts maybe no one cares about for many, many years. Actually, for this blockchain Fest conference, we actually just opened up Singapore. So we opened up San Francisco, Miami 3 weeks ago for minting. And for this conference, we just opened up today. I guess 23 people reserved blocks. It wasn't meant for other people, but just for this. But the question about the meaning, right? This is where the memories part come in. So MetaBlocks' mission is actually preserving humanity's most important memories on the blockchain. Because my co-founder, who's from Google, he was noting that a lot of people's memories just live on one server, Google Photos, Google Drive. And honestly, like, any of these services can shut down this 30 years later, they can go out of business, or your grandchildren may not want to pay for Google Photos, and all those memories you have are just gone. So we wanted to figure out a technology that can preserve these memories forever, and so that the blockchain becomes a very valid source. If you can preserve your memories on the blockchain, then no one company shut it down. So these are some pretty famous public figures that changed the world. These are memories that are important to remember. But we believe that every corner in this world, there's memories that are meaningful, that are important to you, your family, to people, sometimes to the city, sometimes to the whole world. And we want to preserve that. So the way we do it is that people can submit and rip memories into different locations, because each memory is to a location, right? So this is in San Francisco, and I have a little memory there. This is in 2015 memory, the first time I was on a magazine cover. It's not a big magazine, but it's the first time I walked by, so hey, this is cool. So I took a photo, right? Now, obviously, this is just like a little vanity thing, but in San Francisco City Hall, which is a landmark in our universe, this is 2012 when I was doing vows with my wife. Now, obviously, we did the wedding 9 months later, but this is when we got formally married. And this, to me, is very, very meaningful. And maybe on the platform, people say, wow, that's the MetaBlocks founder on the MetaBlocks platform, so this is meaningful for them too, and increases value for that NFT. But not just me. So this is the community, right? The Core Drive 5 is social influence, building a community. So when we launched in Miami, when I was doing a keynote speech at the Miami NFT Week, we had people in Discord community fly to Miami, and they said, we want to meet the team, right? And the people on Discord also said, hey, can you go to the blocks that I own and take photos there? Because we want these memories so you can put on my blocks and it increases my NFT value. So they're coming and they say, hey, we hung out, like this one guy flew from London to Miami, and we just met him a month ago, and one from a lot of different places. And there's a guy who uploaded a memory that says, hey, this is me holding my newborn son. It's so great. I'm so happy. Again, this is meaningful memories to people that they want to preserve. Now, do people care that this guy has a newborn son? Well, in this case, he does, because this is a guy that has 560,000 followers on Instagram that follows his family life, and they're really interested in him. So to them, because he's their idol, they really, and his whole channel is about family, his marriage, whatnot. So people care, and because of that, that memory is valuable and makes the NFT itself more meaningful, purposeful. Now, again, we opened Singapore today, right, just for this conference. I was supposed to be on the speech, but we want to do it a few hours earlier just to make sure there's no problems. And once we opened, I noticed already someone put a memory on in the Japanese garden. I don't know this place, but someone put up a memory that says, it's in honor of my brother who deceased. And I was like, wow, like this is crazy. And I go on the bottom, it says gratitude for this metaverse experience. So I don't know who this is, but someone saw an opportunity like, hey, this is Singapore, and I want to have this NFT, and it's to remember something. And you can see very few other NFT projects without meaning and purpose have this, right? If it's like a fad-like, if it's like Gangnam Style, you're not going to talk about these things. But this stuff is timeless. So we also have a member who also has a recent deceased loved one, and when she spoke on Discord, she said, this is why MetaBlocks is so important to me. And our life is short. We want to do what's meaningful, and we want to preserve these things on the blockchain because people don't stay with us forever. So, as a summary, to design for meaning and purpose, real estate is scarce and timeless. We already know that, but memories make them internal. And you want to think about what makes your project internal. How do you imbue that epic meaning, calling, and purpose into your NFT project? Or else, again, people are there just to get rich, and if they're not rich, then they're gone. So like I said, we launched actually Singapore just for this conference. So we only have San Francisco, Miami, and Singapore. So Singapore is the third city in the world. Later this month, we're going to have New York, because I'm speaking there too. And we just have a little QR code here, so if you scan it, you'll get a free tier 1 or tier 2 blocks, like $100, $200 to mint. So super optional, but there's a lot of good locations around here. I have to get off soon, so I also have some cards with a QR code. We don't have books anymore, like I said, but we have still some QR code cards yet, so feel free to check them out. Again, thank you very much, and hopefully you add purpose and meaning to your life and to all your projects. Thank you.
Thank you once again to our speaker, Mr. Chou, Gamification author, with the topic on how to imbue meaning, purpose to your blockchain project. Okay, next we'll be moving on to a panel discussion, which is called NFT Business and Investing Opportunities. Okay, so before we invite the speakers, let us set up the stage first. Let's bring up the chairs. All right, so how's everybody? All good? Only 1% responded. Every time when I ask how's everyone, only 1 or 2% response. I don't know why, for some strange reason. And the best part, I don't know who's laughing. Everyone has a mask on, so I'm not sure. I have to read by the eye. See, the eye squint a bit means okay, it's laughing. Let's do that once again. How's everybody? All right, all good? Are you guys learning a lot of things today? Yes? Yes. Okay, just to remind you once again, if you have any question to any of the speakers, you can visit them at their booths, okay, to talk to them in case you have any question in detail, or if you don't understand anything earlier, you want to ask more in detail, like people like me, I don't understand a lot. I need to be explained 2-3 times in order to understand things, so I'll start asking a lot of questions. Okay, so you guys can go and ask them if you want to find out more, okay? So, all right, looks like it's set up once again. We have, which is the panel discussion, and right after that we'll go on into a break. Okay, so we'll break from 1 a.m. okay, from 1:05, okay, 1:05 to 1:30. So we're glad you guys can come back 5 minutes earlier, and then we move on to our next topic. Okay, so let's invite once again for the panel discussion, NFT business and investing opportunities. So let's welcome our moderator, Bhatia, CEO of Fellaz. You guys have to clap every time I invite the speaker and the moderator. Let's welcome our panelists, Terence Ting, Next 10 Labs, founder and managing director. Adrian Jones, founder of Yossi Group. Kishore M, founder of Crowdfund Junction, CEO at Mad for NFTs. The hand claps, keep it going, keep it going. Yes. James Park, Revolve Games, co-founder and COO. Gentlemen, the mic's right beside you. Everyone wants to sit according to the picture. Okay. Nice. All ready? Mic's right beside you, actually, at the side of the seat. Is it on? Yeah. Okay, it's on.
Well, a big thank you to Blockchain Fest. Thank you.
Thank you.
By the way, this is the toughest time slot, right? Because it's right before lunch, and everybody's a little tired, they're a little hungry, so we're gonna have to make this. And I'm sure this panel is gonna make this super interesting. But before we start, we're gonna keep this very casual. We're gonna talk about NFTs, what's going on in the NFT world, how the market's developing. What are some of the issues around the NFT infrastructure? But before we do that, let me start with James, and if we can have a quick introduction of everybody.
Yeah, absolutely. So hi guys, my name is James. I'm the co-founder and COO at Revolve Games. We call ourselves a gamified DeFi protocol, and I will go into that a bit further later today during my talk. But yeah, nice to meet you.
Kishore?
Hi, everyone. My name is Kishore, and I'm the CEO, founder for Crowdfund Junction. We are venture capital. We invest in DeFi game and NFT projects. I'm also the co-founder for Off-Chain Singapore. So we run events as well as Mad for NFTs. We provide services for those who are looking into venturing into NFTs.
Hello there. I'm Adrian Jones, co-founder and chairman of Yours Group. I'm also well known, I guess, for the art collection, Witness collection that I spent the last 30 years building, which is a Southeast Asian art collection, some of which you can see in the National Gallery here in Singapore. So I look at things from the point of view of tech and art as well.
Terrence?
Hi everyone, I'm Terrence. I'm the founder and managing director of Next10 Labs. So we are a blockchain and Web3 company, and we have successfully launched a number of NFT projects in the space since last year. So it's great to be here at Blockfest. Yeah.
Fantastic. So my name is Bhatia. We have our own NFT infrastructure and NFT fund called Bridgeport Asia. I'm also the acting CEO for Fellaz, which is a Web3 based platform to allow creators and K-pop artists, but now expanding globally, to basically issue NFTs and come into the whole Web 3.0 ecosystem. But let's kick it off, guys. So we saw the NFT world come up a couple of years ago. It started off with people thinking it's art. Then you had the Dapper Labs that came in. So the top shots or the moments that people did. There's a lot of noise, and what I'd love to start off with you, James, is where do you see this industry going, right? Because is it the gaming NFTs? Is it the utilities? Is it the social thing like the Bored Ape Yacht Club? Where we've come from, where do you see it going?
That's a great question, to be honest. So when I talk with a lot of friends and a lot of other founders, especially in the NFT space, we sort of boil, really, for me at least, we boil down the NFT use case into three categories. The first one being original content, and we're talking about like the BAYCs, the MAYCs, the CryptoKitties, et cetera. And then the second use case is a certificate of a real world good. And it's interesting because just a couple of days ago, or maybe it was yesterday, CZ was saying that he thinks the next NFT, the big NFT thing, is going to be NFT tickets. And that's interesting because tickets are a thing that have sort of been around for thousands of years. I'm fairly certain they had tickets in the ancient times as well. And only now are we seeing NFT tickets, or even CZ thinks that NFT tickets will be the next big thing. And so that's the second use case. And the third use case is NFTs within blockchain gaming. And that's sort of more of my expertise, I guess, given that I am in the industry. I do think we will see a lot more sort of separation of the use cases of NFTs. And for sure, I do believe that we will see a lot more different use cases for NFTs in the near future. But for the time being, I think we're going to see much more established projects, and founders looking into these three categories to begin with.
And I'd love to redirect this to Adrian, because a lot of the times we think of NFTs as art, or the Bored Ape Yacht Club, etc. Right? What I want to try to do also is kind of expand that definition a little bit to intellectual property, right? So tomorrow, let's say I graduate from a university, my certificate of graduation could be there. So, if you take NFTs, and the reason we're supporting it, we're supporting the technology and the development, but really what we're talking about is intellectual property, Adrian.
Well, I think that's right, and not just intellectual property, but also real-world property. And I think that was a great point that James made there. And it's certainly coming also out of the art world. So many people, both from the collector community and the artist community, have come to me and said, we don't really get NFTs just yet. People seem to be paying a lot of money, basically, for some fancy JPEGs. They get the community aspect to it, but I think there's definitely a question about what's the long-term value? And value doesn't necessarily mean, as we heard from the previous talk, doesn't necessarily mean financial value. It can also mean something which is just inherently important to you, maybe from an emotional point of view. But the other element of that is utility. And when we think about intellectual property, that's really where you get into utility. If we think about areas today, like a good example might be gemstones. Today, when a gemstone is issued, it will often go to a gemological institute to be analyzed and have a certificate issued. The value of that gemstone is so dependent on that certificate, it's then so dependent on that chain of ownership. and translating that through to the blockchain world, through the use of NFTs and the issuance of certificates on NFTs, is something that has tremendous value and utility going forward. So we see a lot of applications in these sort of areas.
So Adrian, you brought up a great point, right? So I guess the question I have is, in order for the institutional level people to come into this NFT world, right? I mean, you see Visa just bought a Ape, and MasterCard's buying this, but ultimately to come, and this is, I think, for the benefit of the group, there are certain structural issues as we sit today, right? That are flaws in the system that are restricting the institutional money to come in. Could you please comment on it? And by the way, just keep it free flow between you guys.
Yeah, please do, guys. So yes, I mean, certainly as we've been talking to folks about this, it's very difficult still. I mean, many of us in the room are familiar with crypto. We're comfortable using crypto wallets, working with crypto exchanges. But actually, for a large proportion of folks out there, that's not the case. So we really need to have very good and effective and secure custody solutions. We believe that most NFT transactions in the future will be based on working with custodians rather than individuals necessarily trading through their own.
But Adrian, can we give the group a little bit of a background? So today, when you buy an NFT, you buy it through a MetaMask wallet, okay? So the MetaMask wallet is a pseudo-anonymous wallet, right? So if I was to ever get your keys to that pseudo-anonymous wallet, I actually own all the NFTs that you have. There is no legal attribution to it. So when institutional money has to come in, what Adrian was mentioning was the whole custody solution. Kishore, could you comment on that a little bit?
I totally agree. So adding to what he said, I think the B2C space has already adopted NFTs through arts and collectibles and music. The next is going to be, I think, B2B. So companies are going to, and brands are going to kind of, NFTs their products and services. And I think the third will be the institution. So we look at the adoption in terms of use case, but then institution will come in more from the point of view of on the financial side, how they're going to gain. And then, of course, we're looking at custodians. So if you look at some of the big names out there that are exhibiting, they are already offering NFT custodies. So that's kind of, we're seeing a change in the custody services, which I think custodians or the institutions will want to now come in and look at NFTs.
But the true custody solution still does not exist, right? I've gone and spoken to most of the custody solutions, and it starts to play around when you have to move it from the cold wallet to the hot wallet, right? And how do you actually create that custody solution? So today, some of the words you guys might hear is IPFS, okay? It is a storage system where some of these files are stored. Typically what happens today, all the metadata, the master file, is in the public domain. So technically, somebody could take that master file, download it, remint it, right? So ultimately where we are trying to get to on the custody side is basically real ownership. And that's what we're talking about. But some of these custody solutions are coming. So now, what I'm sure the crew is most interested in, investments. How do we think, Terrence, how do we, I mean, 95% projects are zombie projects. How do you look at NFTs and how do you evaluate, or what is the criteria that you use?
Yeah, so I guess the NFT playbook today, there's still a lot of I'd say room to explore, like how you evaluate a project. But I think last year, when Bored Ape came out, it was one of the first pioneer projects on the Ethereum chain, and people were looking at things like, their community. The community is definitely the #1 thing that you look at. So like you typically join like their community channels, you look at their Twitter and Discord.
So community, right? So you go to their Telegram, you go to the Discord, you go to the various community channels and see what the interaction is, the quality of the interaction.
Exactly, yeah. And from there, you can kind of tell like the quality of the community really plays a part in kind of like driving price action around the NFT collection, right? And besides that, of course, utility, looking at what are
So
the actual use cases?
let's talk about utility, right, for a
Yeah.
second. So utility could be, because I own a certain thing, will give me access to certain things. For example, Sylvester Stallone just did an NFT collection where, you get to watch Sylvester Stallone movies with him on this video conference call, and he's commenting on it, right? So for different people, that may be utility. So community is number one, utility is number two. What else?
I would say also looking at possibly like the art value, the artistic value of the NFT, like that also plays a part. Like aesthetically, is it something that people will buy into? And overall, like the narrative as well, right?
Right, so
The
we
concept.
had a project called BIOS in Singapore that did a dynamic NFT where the plant actually grows for the next 6 months. So dynamically, you can actually see. So I guess, depending on how, because art's a very personal thing, right? We have different preferences. So the technological advances that are being done are also quite interesting. There's a project you should check out called Alethea. Alethea are revenants. It's 100 revenants, but they're artificially intelligent. So, there's a lot of interesting things coming out. From your perspective, James, when you look to invest, or if you were thinking about investing other than, in Revolve Games, what's your criteria? How do you look at this?
I think it's a lot of there are quite a lot of similarities to what Terrence has said, and I guess just coming slightly back to why institutional money doesn't go into NFTs is that it is so hard to model the value of an NFT or even try to guess the value proposition of an NFT. Like, how do you evaluate a community? It's a Web 2 method that doesn't apply because the product is a Web 3 product. And so that's why institutions are having such a difficult time evaluating, especially Web 3 ecosystems. I don't think NFTs are really an asset. They're more of a Web 3 sort of brainchild. And so looking at that, or coming back to your question about investments, it's a tricky question. I do have to say that a lot of those features that Terrence mentioned, utility, community, also its long-term value, and undeniably within the crypto sector, how much marketing goes in, et cetera, et cetera. You're almost basing it off the merits of the team that founded the NFT. And those are some interesting sort of factors that I look at when I do.
So James, I'll tell you, so for me, the gaming sector and the gaming NFTs are huge. So let me tell you a specific statistic. Today, 8% of all of the NFTs sold are the gaming assets, but 55% of the most active wallets own that 8%, okay? So you have services today. We have Hype Labs, which we've partnered up with. We have some things like Nansen. So you have all of these analytics coming. So to me, what was most interesting is it's still a small category, but the guys who are the most active are the ones who are participating, which actually then becomes a lead indicator for me as a specific asset class I should focus on. Kishore, how do you invest?
I totally agree. I think gaming NFTs makes total sense because, like for example, my daughter was 12 years old. She used to play Minecraft. And now she's 15, she's kind of outgrown it, right? If that was an NFT, she has scored so many points. She could have now sold those and she could have made money out of it, right? So it becomes an ownership. So Web 2 gaming, unfortunately, you don't have ownership, but Web 3, which is NFTs, allows you to own the in-game asset. So I think that's a great space. Another thing which you may want to consider is derivative NFTs. So something that has done well, you can look at a derivative of that NFT. It will not give you the 100x, 200x, but it definitely has a lot of demand. And if the project continues to deliver and the utility is there, then there is some growth. And maybe the last thing I could say is, if a Bored Ape comes up with their NFT, for example, the Other Deeds, if I'm not mistaken, right? That's from Bored Ape, right? So that's good. Doodles coming up with Doodle Spaces, right? So something that is already existing, done well, and they are now coming up with another project, I think that's something that you may want to look at.
So now we are starting to touch on gaming, and by the way, that's a big passion of mine, and I think that is the future. And so I'll pose this question to Adrian. Adrian, why do the traditional gamers think nothing of Web 3.0 gaming and the gaming assets? Like, well, I mean, literally. I mean, you know, the traditional gamers do not think much of Axie Infinity, the play-to-earn games. And how do you see this sector evolving, and what needs to be there in order for that mass adoption and the migration to happen?
And I think there's a broader question there, which is, and it relates back to your point about the volume of wallets active and number of transactions, but it's also about the value. Because when you're looking at the ecosystem, really the total value, which is not just, so it's the quantum of the transaction as well as the number of transactions is vital there. And so I think what we're seeing both within our experiences in the gaming and entertainment world and within the art world is that because there are well-established successful models that have resulted in millions or tens of millions or hundreds of millions of dollars of transactions, it's seen very much as high risk to move into the relatively early stage NFT market right now. So there's a lot of interest, but people are sitting on the sidelines waiting for a lot of the issues to be shaken out. There've been a tremendous number of security issues, whether that's smart contracts that have gone awry or hacked exchanges or platforms. So there really isn't the need to take the risk at the moment. If you've got assets which have value, you're very cautious about putting those onto NFT platform.
And Terence, so you know, he hit on a very important point. But you know, as you kind of look around the world, right, people have different preferences, right? Asia was more like a collectibles thing. US is different. It's Bored Ape. So if you were to kind of segment from an investor standpoint, you know, what does the NFT investor in the US or Europe versus Asia represent to you? How do you differentiate that, or is there a differentiation?
I think in general, Asia is a lot more gaming focused when it comes to NFTs. Like Axie is actually from Vietnam, right? And they've done really, really well until the recent incidents that happened, which led to a hack of their protocol. But overall, the GameFi space has tremendous potential. I think this year there will be other new revolutionary projects that will look to build something different, especially with the concept of play to earn. I think play to earn will evolve, right? The current state of play to earn is probably not really ideal in the current ecosystem. So I think that would be really interesting to see which teams and which projects are able to build a game that is essentially fun to play and experience first, and then bring in the token economy later on. Yeah, I think the challenge of building a great game and also integrating a strong economy for the tokens, and usually it's a dual token model as well, you know, that is actually challenging, you know, for many teams out there. Yeah.
So, you know, the NFTs, we always looked at it as like the Renaissance, right? So that's how I compared it, right? As soon as we crossed $1.5 trillion in market cap for all of crypto, you know, guys like James were just bored and they said, hey, let's do something fun, right? Let's create these NFTs, right? So you know, from a risk perspective, we've all been investing in the crypto world for quite a long time. The way I kind of explained this risk model was that the crypto was the liability side of my balance sheet. The NFTs were the asset side of my balance sheet. So if you look, for example, Sand did a $93 million raise. Sand token, you know, lost 60 to 70% of the value. However, the Sand real estate held its value, right? Okay, I get the fact that Ether came down, but nonetheless, on a per Ether basis, you know, tier one projects like CryptoPunks, Meebits, Zookies, you know, they actually held their value. So a lot of people found this asset class as a natural hedge to their crypto ownings. James?
Yeah, that's an interesting observation you mentioned, and I think it's mainly because of that rift between the utility that people believe that their NFT can provide as compared to the utility that the token provides, and especially in the gaming sector, there is so much stronger of an argument for the use case of NFTs, I feel that that's why the NFT holds value much more than the token. And that is a really interesting observation. And we are, I guess, as gaming or blockchain gaming founders, we are looking at trying to bridge the rift between that, because we not only want our NFTs to be successful, but we also do want our tokens to be successful. Just coming back to that question of why Web 2 gamers hate everything about Web 3, part of the reason why I think that's the case is because surprisingly, a lot of Web 3 games require microtransactions, and that's for the sustainability of its ecosystem. Web 2 gamers have been vehemently against microtransactions because they've only thought of it as a cash grab from developers who've been selling them the game, first of all, and then making them pay more to go beyond the content wall. I think it's just a matter of education and time before we sort of explain to Web 2 gamers that, yeah, you're making transactions, but it's not only good for you, it's good for your friend, it's good for someone else living on the other sort of other side of the world. That being said, I do have to agree that Web 3 infrastructure is not there yet as compared to Web 2 infrastructure, especially in the gaming sector. For example, if you're trying to build an MMORPG game, like we are, there's no single blockchain that can handle all that throughput for you, nor sort of latency is also an issue. I mean, if you use Ethereum or BSC even, let's use the example of BSC. If your transaction takes 5 seconds, that's like a decent day. If it takes a second, it's an excellent day. In a game, if every action takes a second, your mind would just be blowing apart. And so we're just not there infrastructurally. So it's a matter of time, technology, investment. But as more institutions, especially large gaming companies, are moving into that sector, I do believe we're going to see a lot more expansion of Web3 gaming.
All right, guys, we're coming on to our final 5 minutes. So I want to just kind of open this up. Let's go crazy. Let's make our predictions of the future, because I'll start off. I think in the next 10 years, the virtual economy is actually bigger than the real economy. I truly believe, I think the way the transformation's happening. Today, we have the gaming world at about 200 billion revenue, but I think it's going to be growing in a significant manner. The second thing I'd love, Kishore, if you could comment on would be, you know, the real world is now starting to come in. You mentioned ticketing is going to be a real world example. We're going to have brands like Gucci and everybody, you know, and the entertainment industry, which was never, you know, they were never capitalized on these digital rights. So, you know, I would love for you guys to kind of share where you see the next 2 to 3 years, where you would like to focus, and you know, where people should be also keeping an eye open for.
Yeah, sure. So I would say the NFT market for some time was like a parent and a child. So the price of the cryptos would dictate the price of NFTs. But if you look, there was a dip in the first quarter, and then after that, NFT sales again picked up. So there's actually really no correlation between the crypto market and NFTs. I think the real big use case where brands and companies and all are going to come in, and that's why you see Gucci and all these guys, Nike coming in, is going to be because of the metaverse. And that's the big play which is coming. And if I would bet, I would bet on the metaverse.
Metaverse, okay. Adrian?
Well, I think adding to that, and I agree with that point, but adding to that also, future NFTs will be very much dependent, or a large sector of the growth will be on utility. And ticketing is one of them, certificates of things like gems. It can be for vehicles, property in real world as well. And I think we're also going to see very much the importance of, if the assets have value in the real world, there'll be much more comfort in dealing with the certificates for them in the NFT world. And I think that's going to be a sort of hybrid area that will very much develop. It's dependent really on solutions in the custody area, and it's also dependent on solutions in areas like the wallet area. And you know, that's one of the reasons we're working on a wallet that enables you to manage your NFTs without exposing them to transactional risk.
So I hear no man is an island kind of comment, right? Which is, in the old days, when we were in the whole blockchain world, we're like, oh, they don't know anything. We're the decentralized guys. We know everything. But it's one of the things that, we've been observing is that the Web 3.0 guys are taking actually and making an effort with the Web 2.0, and it's a matter of collaboration, because unless this mainstream also comes and adopts, it's extremely important, this collaboration, James. What do you think about that?
Yeah, absolutely. I mean, realistically speaking, I would say 95% of the world is still in Web 2, and we are the minute minority that are building in Web 3. That being said, a lot more Web 2 companies are becoming Web 3 aware. They're trying to understand more about Web 3, and in that sort of vision, I would suggest, perhaps because there were so many suggestions with what we're going to see in the future, especially for our audience here, educate yourself, go find out more about Web 3. I mean, just today, this morning, there was a 15-year-old coming to our booth talking about Web 3, NFTs, DeFi, more than I would expect an investment banker who's 40-year-old would know. And we're basically living in a generation that is learning things so quickly about Web 3. We're in a position where we're catching up to 15-year-olds. And so I think sort of my final word on this issue is continue educating yourself, keep reading about Web 3, be more sort of, have an active awareness of Web 3 technologies, especially around you, given that Singapore is one of those places that is embracing Web 3 technology. And yeah, that's it.
Terrence, give us the view of the future.
Yeah, I mean, I think we'll see a fundamental shift in GameFi.
Okay.
Yeah, I think there'll be a shift in terms of talent that's migrating from Web 2, AAA game studios, coming into Web 3. A lot of them have already made that move, and they are working on projects that are going to be launched later this year or next year. So I think there's a lot of potential there for the quality of games, blockchain games, to increase and to be increasingly being able to draw a more mainstream gaming audience, which are the Web 2 gamers. So I think when that happens, gaming will be a huge part of the entire ecosystem in NFTs.
Rarely do you get a panel that kind of agrees on one thing, but clearly what we've seen, we all agree on one thing, is the gaming and the NFTs and that collision. Fantastic, guys. Thank you so much for the panel. Thank you to Blockchain Fest, and enjoy your lunch. And we'll see you here.
Thank you, everyone.
Thank you.
Thank you.
Thank you once again to our panel of discussion. Thank you very much to our speaker and moderator. Once again, a big round of applause to our moderators, the Bobby, Bhatia, our panelists, Terrence Sting, Adrian Jones, Kishore M, and Mr. James Park. Thank you very much. Okay, ladies and gentlemen, looks like we are going into a break right now from 1:05 till 1:30. So we'll be starting our next session right after lunch. Would be at 1:30. Suddenly it went out. Would be at 1:30. Okay, so 1:30 we'll start again with another panel discussion. How venture firm are investing in DeFi. Okay, that's happening at 1:30. Okay, followed by at 2:10 we have blockchain will change how business function. Followed by right after that, enabling Web3 innovation and value creation. And followed by with the next topic, sustainability plus blockchain. Right after that, blockchain gaming, panel discussion, woman in blockchain. What's the next game after P2E? And the last two will be centralization in a world of decentralization. And the final topic will be Singapore as Asia's hub of crypto, philanthropy, and digital assets investment. So that's happening from 1:30 all the way till 6:40.
like, oh.